Hello, everybody. We are now officially live. I think all platforms are just waiting to catch up. We are waiting for Yanni to join us. He'll be here any moment, our third coach of this session. For everyone, I'm sure you remember Walter. We did a live session, I think last week it was, right? So welcome back, Walter. It's good to have you on again. Walter, can you hear me?
No worries at all. It's good to be back.
Awesome. So yeah, like I said,
yeah, can you hear me?
I can. I think there's a bit of lag between us. So there's definitely lag. Yeah. You can hear. Perfect. All right. So yeah, to everyone watching, we're just going to give it a few minutes. Yanni has joined right now, so I'm going to just wait for his confirmation. We're going to get him up on stage as well. And we're going to give it a few minutes as well, just to essentially wait for, viewers to come logging in, because not everyone's going to be bang on time, which is quite natural. Comment sections are open on all platforms. So Yanni, are you here?
Can you hear me?
I can hear you. How are you doing, my friend?
I'm very well, thanks. Walter, nice to meet you, man. I don't think we met before.
Hey, Yanni, nice to meet you too. Yeah, first time we're meeting.
Well, maybe
or rather, we're connected.
Am I on? Can you see me?
Your camera is not on at the moment. It's just a black screen at the moment.
Oh God. Okay, hang on.
Oh, something's happening. We'll give it a few more minutes. We'll let Yanni sort out a few technical difficulties, and then we'll get the show on the road.
Yeah, man. I've had this problem, as you know, but I'm pretty sure I've sorted it. But yeah, it's not showing the mic.
Are you clicking
the mic, the cam?
Are you sure that the cam button at the bottom of your screen is not switched off?
Yeah, there's a stop cam, and then there's a switch it on.
There should be a button. Maybe it says like show yourself. Oh, there we go. There you are.
It's the wrong cam, but that's just gonna have to do for now. That's the wrong cam, by the way. But it's like one of those cams with a USB port that you kind of put on your laptop. Well, that was over. Anyway, here we are.
Don't worry, man. You still look good. You still look good. So don't worry about it.
Thanks, man. I've put some makeup on, some blush. You see it? Put some effort in for the show.
Awesome. Well, I'm glad you're back. You're on screen now, so the viewers can see the lovely, see your lovely self. Even if it is low quality camera, it doesn't matter. The trading is what's important, right?
For sure, yes. I don't know if you guys had a look at the market so far, but I had a look at the NASDAQ. That's the one I'm focusing, obviously, but it's been a very, very slow day, like pre-market anyway. It's just been trading sideways. I'm not sure if people are waiting for the news event coming out in half an hour after the open, even though it's not it shows as a high impact news event. That's the ISM. Yeah, but I don't know if it will start to move after that. But for now, like if you just look at the 15-minute candles, it's just been doing nothing. Even the point of control is also showing, right where that price action was.
We had a very, very high volume day yesterday and the day before. I would be surprised if the volume drops off completely today. I don't think ISM is going to have that much of an impact, but you might be right on this one. We'll wait for the open. The open is in 10 minutes time to all the viewers for the US Open. Usually picks up quite nicely then. So we can actually start sharing charts. I don't know who would like to go first in terms of sharing charts. If you just hit the present button at the bottom, and then you can share whichever chart you want to show.
Just so we're all sort of a bit clearer. We're sort of a bit clearer, right? I think we're all looking at something slightly different, right? I think, Jenny, you're looking at the indices. I'll be looking at NASDAQ. I'll be looking at gold and Bitcoin today.
Right.
Maybe Eurodollar if I do see something interesting on there. And then that's is it just myself and yourself sharing our charts today, or Sam, are you going to be?
It'll be all three of us. Yeah. So we'll
Okay.
get a bit of screen time.
Okay, now
Awesome.
I just have one question for you. How do I know which screen I'm sharing? Because there's more than one screen here on my end.
You should be able to select which one. It will say
Yeah.
Yeah.
Okay.
It'll say like the title of it.
Shares, screen sharing these of these is easiest with two monitors. What? Oh.
We'll let you figure that out. I'm gonna share my charts then whilst you figure that out. And then we'll get back to that. So hopefully any second now you should be able to see my charts pop up on the screen. They should be live now.
Okay, wait. Can I jump in? Come on, man. I was first. I want to go first.
If you can make it happen, I'll give you 10 seconds to figure it out. And otherwise,
what do you think? Is that it? Can you see it?
I see. Hey, okay, you got there.
There
well
we go. Right. There we go. Okay, so this is my setup. I'm basically, as you can see, like I've got 4 screens or 4 charts. It's the same market, obviously. It's just the NASDAQ, and I basically have the 1 minute time frame here on the right hand top corner, and I'll tell you the indicators I'm looking at in just a moment. And then to the left of that, I've got the 15-minute time frame. And then just below that, I've got the half an hour time frame, and then to the right of that, I've got the 1 hour time frame. So I've got those 4 time frames, and I like to see some confluence on at least 2 of them. And then the 1 minute time frame I use, that's basically my trigger time frame, if that makes sense. That's the time frame I use to time my entries. I do believe your edge you find on smaller time frames. The opportunity might be spotted on bigger time frames. But for actual entry, I do prefer the 1 minute time frame. So it may look a bit busy on the 1 minute time frame, but it's pretty straightforward. I've got pivot points. Pivot points is something I think most people will be familiar with. It's if I just on the 15-minute, it'll probably be easier to show you here. I've got the pivot point there, and here you can see it's S1. So you get S1, S2, S3. The same with the resistance, R1, R2, R3. They can serve as really good support and resistance levels or areas of interest where you may want to start to pay attention to a potential turning point. It can also be used to take profit. So if I show you for yesterday's market action, you can see it like, it went to the S1 area, and then from there it started to reverse. Now, obviously, it's going to be tricky to know exactly where to enter here, but that's where that's where you start to look at, okay, but what does the half an hour time frame look like? What does the 1 hour time frame look like? So to show you yesterday, I think when we spoke yesterday, I did mention to you that I took a trade on the NASDAQ here. But here is a nice engulfing candle on the 1 hour time frame. So if I combine that with the fact that it's now sitting on S1, do you see how I built the probabilities in my favor? So I get the engulfing candle here, combined with the fact that it's on this S1 level, and now I may look at the on the 1 minute time frame to see if I can find an entry. Does that make sense?
Yeah, no, absolutely, makes perfect sense.
So that is that's the purpose of that particular indicator, the pivot points. And then I've got just a 34 EMA. The reason why I'm using a 34 EMA is just because of lots of testing and trading, and it just seems to respect that level. You can see at the moment. It's at the 1 standard deviation of VWAP, and it's finding also resistance then, and this is pre-market, so obviously you won't be interested in that. So that's the EMA, and then I've got VWAP. I just mentioned VWAP. VWAP to me is very important. You can trade that in many different ways. The 2 standard deviation. I've got the 1 standard deviation that's marked with this dotted line. So this is the 1 standard deviation. That line there, that's VWAP itself. And then you've got the 2 standard deviation. I've also got a 2.2, which serves no purpose whatsoever other than I just like to see a band around the 2 standard deviation. The 2 standard deviation is actually the more important band itself. So so that's VWAP. And then I've got the prior day high and low. I like to see where the previous day's high and low is. Okay, it's probably easier to see on the 15-minute time frame. Yeah, so that was yesterday's high. That's yesterday's low. I mean, you'll know yourself like that is also that can also be a very good support resistance area. Or if price is edging up, and you can get some confluence on higher time frames, it can be a breakout out of yesterday's high. So I like to look at that, and then I've got the volume profile, pretty standard tool that traders like to look at, and then support and resistance. So
nice.
so it looks pretty busy, but it's there's nothing funny, there's nothing unusual. It's pretty standard indicators that most people will be familiar with.
It's all very useful information. It's
absolutely.
Yeah.
Yeah. So then on the 15-minute time frame, you just get I've got also the previous day a high and low. I've got support and resistance. I've got the pivot points, and then the volume profile. So not as many indicators as on the 1 minute. And the half an hour, as I go longer, the less indicators I use. Yeah, I only use the support and resistance. With this is a 233 EMA. That's just giving me a general direction of the market. And then the same with the 1 hour time frame. It's just support and resistance. Okay, I don't need to put all the rest of it on there because I don't actually make decisions on here. I use them to help me to make better decisions on the smaller time frames, on the 1 minute time frame. Now, you can wait for all the best setups, but as you know, as traders, even when you wait for the highest probability setups, you're still going to have losses. They're not necessarily going to work out.
Of course, of course.
But this is what I use, yeah. So that's my setup. Over to you, Sam.
Sure. Walter, unless you want to jump in first, I don't mind sharing my screen first, or if you're ready to show some magic, feel free.
Yeah, of course I can. I just quickly touch on what I'm looking at for gold dollar and Bitcoin dollar. Yeah.
Okay.
1 second.
No problem.
Wait, let me just share my screen 2 seconds.
No issues. Let me know once you got that set up. I can add you to the stage as soon as it's done. To all the viewers, if you have any comments, any questions trading related, please do not be afraid to put them in the chat. Okay, we are reading every comment, every question, and we will get back to you. There is no such thing as a silly question when it comes to trading. All right, so don't be shy. Please, by all means, leave comments.
Awesome. I've already shared my screen.
Can I leave a comment?
Okay. Yeah, if you like to, you're more than welcome.
Come on, Sam, do better. Sorry, yeah, carry on.
Oh, good. So, now my baby gold. So this is doing really well because I'm still in a short position from earlier today. So I went short essentially at this order blocks after yesterday. There was a very nice shift to the downside. Anticipated a retest of this general area, so it's a high volume area. And yeah, price hung around there for pretty much the whole of London. And then eventually, like towards the end of, towards the start of the New York session, we saw that big sort of drop to the downside. So I am holding this. I'm anticipating a continuation towards the low of yesterday's trading range in Asia, right? So obviously the low of the range is all the way down here. So this is a trade in motion, but I do see an opportunity for a continuation setup in New York session today. So this is essentially what I'm looking for when it comes to a continuation. I know that, of course, like the last session that we had last week, I gave like a full breakdown of my strategy and system. It's not as sophisticated as I want to say the J, but of course I wouldn't. But it's not as sophisticated as Yan strategy. I just purely focus on price action, and I'm a trend trader, so I utilize trend cycles when identifying opportunities. And my goal is to trade in line with whatever the predominant intraday trend is in that very moment. So if right now the trend is bearish, then I'm looking for an opportunity to trade in line with that. If it's bullish, I'm looking for an opportunity to trade in line with that. So right now, the established trend cycle is bearish, right? On the 15 minutes, as well as the 30 minutes time frame. So these are the two time frames that I use to identify trend cycles. And then on the 1 hour, the 4 hour, I simply use this to identify key highs, key lows. This is areas that I'll be looking to essentially take profit. So like with this trade, for example, I took some profit when the market traded into this key low. So this is the H4 sell side target. So the low of the 4 hour range. So the market basically traded into that low. That low also coincided with a market imbalance that essentially was open preceding this price drop into this region. So yeah, so what I did is I took some partial profit, anticipating potentially the market might just bounce all the way back up. But going into New York session, this is still very bearish. Why? Because if you remember from last week's session, the way that I identify trend cycle is very different to how traders are taught to identify trends in retail, which is usually using trend lines or using like Elliott wave patterns. I don't really look for these things. Every trend cycle I look for has three very different phases. So the first phase is, of course, the initial leg in which price breaks market structure, right? So this gives me two different points of interest. The first point is the most recent swing low preceding the highest point prior to the inflection to the downside, right? So that's my first point of interest. I usually label that as number one. Second point of interest is the first low generated after the break of structure. And then, of course, the third point of interest is going to be the new low that is created below this low. So it has to be a case of price actually dropping below this low and creating a new low. This doesn't count as a new low. The reason being is because this is what we call a trap. So the market basically traded liquidity purge below this low. And then you can see that this is it's a spinning top formation, right? So this is what I like to call a trap candle formation, as the market essentially traded back into the range without sort of creating a new low outside of this initial trading range. So right now, obviously, we are still within that secondary trading range. So again, let me just I'll just highlight the range I'm referring to, right? So this is the range that I'm referring to. So price is still trading within this range. And what I'm anticipating is another leg outside of this range, creating that third and final phase of the trend cycle, after which then I would anticipate some sort of a sustained bullish reversal. So the question now is, of course, like if I'm looking for a continuation to the downside, where is my area of interest? So on the 15 minutes, obviously, like what I saw was this morning, all right, I saw the market was delivering a micro bullish cycle to the upside, where we saw the initial leg, we saw a break of structure to the upside, the market trapped back into the range, and then afterwards broke outside of the range, creating a new high, consolidated before giving that shift back into the range, creating the beginning of a new cycle. So the first point of interest is the point where market broke structure. So that's essentially the low, the most recent low prior to the highest low, right there, prior to the highest high. Okay. And then after that, my second point of interest is the new low after the break of structure, which is this low down here. Very simple. Right. So after that, obviously the market then obviously retested this bearish order block. So again, if I were to be looking at this, so right, yeah, if I were to be looking at this at the time, because I was already in a trade, but if I wanted to add onto my position, I would have added onto my position at this order block, because from this order block, I would have anticipated a continuation to the downside, where the market has now created that third low. Okay. Now, usually what happens after the third low, the market trades into the secondary range, which is right here, retest that secondary range, and then from there we're going to see some sort of an inflection to the downside, after which the market will potentially deliver that final leg back towards this low. Okay, so that's what I'm anticipating right now. Price is in my area of interest, right? So it's in an area, I mean, if I wasn't already in the market, then I would have gone short, but because I'm already holding a position at the very high, so I don't really see any need to add on to my trade or add on to my position. I personally try to avoid doing that. I focus on one entry per setup, as opposed to, I know some traders like to focus, like if they see 3 opportunities to enter in a single setup, then they'll take it. But for me, if I get a great entry, I stick to that entry, because I usually take a 1% risk per trade. So stacking up my trades would potentially lead to me over leveraging my account, and that's definitely something that I aim to avoid at all costs. So So yeah, so that's that for gold anyway. So bias on this is bearish. Price isn't an area of interest to go short. And if I were to go short in this case, for example, I would essentially sell where price is. My stop loss would go above the high of the range of the order block right there, right? Could be a few pips above the high. And then, of course, my target, like I mentioned, would be the low of Monday's Asia range. So this is the low that was created prior to the next, like the session close. And obviously the Asia. So because I live in Asia, so I tend to trade Asia open. So Asia open, the market gave a sharp drop to the downside before breaking out above the high of the range. So this is the highest point prior to the session change. So I am aiming for the market to essentially trade down to the low of this range. This is an unmitigated zone. And this is an area that potentially price would need to trade to rebalance the books on some orders that might be residing within this range. So yeah, so this trade could, if it does play out the way that I'm anticipating for it to play out, this could easily, very easily yield a 1 to 3. If you enter at a higher price, you could get even a 1 to 4 out of this trade. So that's for gold. And then my alert has just gone off on Bitcoin actually, because there is a setup. Yeah, so there is a setup I was waiting for on Bitcoin. This has been doing really well. Like I've been absolutely killing this past few weeks. So this has been really, really good. Like the trend, I only started trading Bitcoin towards the end of sort of last year, because I noticed that it trended really, really well, especially after the launch of the ETF. A lot of institutional capital flowed into Bitcoin dollar. So it started to move like Forex. It started to move like gold. So it became very easy for me to like tap into the trend and also trade the trend in a way that works majority of the time. So yeah, so with Bitcoin dollar, I mean, what we saw obviously on this is actually quite funny because I woke up on Monday morning, a friend was, because I was like, hey, Bitcoin's probably going to go down, who knows? But then this happened obviously because Donald Trump made that tweet about the cryptocurrency reserve. It wasn't a tweet actually; it was on his Truth Social platform.
I think on our side we're still seeing the gold chart, not Bitcoin at the moment. I think you have to switch tabs.
One second.
Yeah, man. I've been like, oh, are you telling me I've been like, executing the wrong trades now? Oh, Walter, I'm following everything you're saying. I need to close my positions now.
You might have to remove the screen and then reshare it if it's in a separate tab, and then reshare with the Bitcoin.
Oh, I see.
We can only see.
Thanks for bringing that up.
No, it's fine.
Yeah, I mean, yeah. Sorry, like I did take a small trade, but we can go through that later after.
Are you in it right now, or?
I'm already out.
Oh, you're already out. Okay, no worries.
Yeah,
okay.
If you, we'll show you. I'll show you in a minute.
Yeah, absolutely. We'll let Walter do his thing.
In and out, very fast. But yeah, so this potentially could be an in and out scenario with Bitcoin dollar. So yeah, so we saw the Truth Social situation with Trump announcing the crypto reserve, pump price to the upside. Next day, price began to dump. All the market dumps because of the tariff announcements that Trump did. So everything basically went down that day. And obviously, like what we saw was now like the beginning of some sort of a recovery yesterday. So we saw some sort of a recovery to the upside. But what I saw as well is that there's a potential that price could, for Bitcoin, climb back up because price came up, left relative equal highs, which essentially would have engineered. So I know for a fact that there are like traders that would have been buying Bitcoin around this price, and they're holding their bag right now, or maybe they're already like liquidated. I don't know what happened there. My screen just went dark.
Yeah. No worries.
Don't worry, man. That happens to me all the
Can
time.
you guys see my screen?
We can't. It's
no.
Really?
Yeah. Nothing.
That is.
Try resharing it again. Cancel and then reshare.
Yeah, that's bizarre. Let me try stop sharing it and then reshare it again. Yeah, that was really weird. That's never happened before.
It's all good. It's all good. But
yeah, my screen's still dark. Why is it dark?
To see your trade in a minute?
Yanni, you can take over from here whilst I figure this out.
Well, it's like it's a nice one because it's based on exactly what I just described or explained earlier.
Go on, pull up your charts.
So,
let's have a look at this whilst Walter figures out what happened.
Entire screen, this one. Okay. Can you see it?
Yes.
Can you see it? Like it's like it looks very small. Can you see the chart properly?
We see 4 charts at the moment. I don't know if that's what you want us to see.
Okay, but I mean the details. Can you see the smaller charts? Like okay, I'll tell you what.
If it's full screen, pretty much, yeah.
Okay, so yes, this is the pivot point that I showed you. Then you get that bearish rejection of that pivot point. Here on the 1 minute time frame, you get a rejection of the 1 standard deviation. So that's your entry. And then the take profit is the 2 standard deviation, but that also lines up with the support level on the half an hour time frame.
Right.
You see that?
Yeah.
So it's just rejection, take profit. It's a very quick 1 to probably a 1 to 1.5. So anyway. Sorry, nice. Sam. I know you want. I know you wanted to start, and then I just kind of completely.
No. Please, no. That's the whole point of these sessions. All right, let me jump on real quick. Let me know, Walter, when you figured out what happened with your screen.
Yeah. I'm in now, but I also had an opportunity to take a trade as well. But I'm back on now.
Oh, okay, perfect. All right, I'll be very quick with a quick explanation of what I'm seeing. So we've got the 15-minute S&P 500 futures chart here, the E-mini. Volume profile session, so daily volume profile is this indicator here, basically showing you where all the volume was traded or the amount of volume traded on each price level. So yesterday we had the point of control, so the highest volume traded down here on the S&P 500. I marked it out, and I was expecting, heavy buyers to come in. I actually missed the opportunity, but it's not a big deal. I'm sure there'll be another one. When it gets to this area, we're talking 45 minutes ago, I wanted to see some heavy buying jump in. And yeah, we literally saw it as the market opened on the footprint 5-minute chart. You can see over 1,000 contracts on the delta for the buyers here. Another 1,000. Oops, I just moved that. Didn't mean to do that. Another 1,000. Great place to get in for some bullish moves. I did miss it, sadly. But it's not a big deal. There's always more opportunities. It's not my favorite setup as well, just going for high volume. That's not really the best way I personally like to do it. I like to wait for people getting trapped in a trade, right? So, for example, it hasn't happened yet, so it's hard to show something that hasn't happened. But say, hypothetically, imagine on this, as it pushed down, imagine we started seeing really heavy selling occurring, right? Really big numbers. I'm talking, 1,000. Sorry about that. Everything's disconnecting. There we go. 1,000 plus on the sell side. Really heavy selling, people really jumping in aggressively. If we started seeing that and the market starts moving against them in the opposite way, and we start seeing them literally dropping off, getting out of their position, okay? And the way you would see that is heavy buying, it will look like. That's usually the kind of setup I'm looking for, right? Let people get confident, let people put a lot of risk in the market and let it go against them. Once it starts going against them and they all start dropping off and, getting out the market and scrambling, that's when I usually jump in for a nice quick move in the opposite direction, essentially. I generally don't like to trade heavy volume. If I see heavy volume in one side, I generally never like to trade it, mainly because I could be getting trapped as well. I'm aware that if you're on the side where there's most money, there is a chance people will notice it. Big institutions will notice it and try to take advantage of that. So it doesn't always play out in your favor. So it's good to kind of wait, let people put their bets on the table, see how it's working out for them. If it's not working out for them, then okay, I'm going to go against them. And that's essentially
sneaky Sam. You're an trader, man.
It's quite a
be in a difficult position. Then you take them out. No, that's good.
You gotta play the game. You know, everyone is against each
that
other.
Is the game. That is the game. Know what everyone else is doing and go against them.
Yeah, no, for sure.
But as of right now, I would like the market to go up here to this area, potentially for a short trade. Again, completely depends what happens when we get to that area. I would like it to dip down again, maybe get in for another, potentially a buy. If I see sellers thinking this is just a small retracement, they start selling heavily and thinking it's going to continue down, because we were very bearish in the last 2 days, right? As you can see, on Monday, very bearish. Yesterday, it was very bearish, but it did recover later on in the US, like afternoon session. But we started off and it, again, became quite bearish again. So I'm hoping, ideally, the perfect scenario is that we drop down again, sellers get overly confident, start putting a lot of money in the line, and buyers trap them. And the moment they get trapped in that area, the market should hopefully have a nice upward movement and just wipe out everyone's stops, essentially. That would be ideal. If that happened, I would love it. But it doesn't always work out, obviously. It doesn't always set up exactly how you wish. Another scenario that I would like to see is, okay, if the sellers aren't getting confident and are leaving the market, that we go up to this area and potentially buyers start getting more confident and get trapped. Or maybe if they don't get trapped, continue, and then I drew that completely wrong, comes back as a small retracement, and then potentially you can have a long position there. But again, completely depends in the moment. I have no bias as of yet. It really depends which area it'll go to first. So I'll have alerts set here and here. One of them will get triggered at some point, and the moment it does, I'll keep my eyes on the charts. But that's pretty much it. I would be interested to see if these buyers can defend this area quite well, because that is... Oh, we did see a bit of a trap. I completely missed it. Okay, so here's a perfect example. I can't believe I missed that. Right. We started seeing sellers coming in a bit heavy here, over 1,000 contracts. Someone was getting a bit confident. And as it pushed away, you can literally see them exit there. That's their stops above the candle that they entered. And their stops got hit. And the moment it got hit, there was a nice little push up, and you can have a small scalp. It's not the greatest one because it really isn't that much volume. You're looking for, quite a bit more people joining in on that. I think this is pretty much one or two institutions making a bit of a bad move, but that's about it. But then the buyers got a bit confident, started stepping in, and they're now getting a bit trapped. So it's still a bit of a battle. I'm going to wait it out, see what happens. Ideally, I kind of want to be trading in this area here. I don't really want to trade too high up when we're here. Ideally, let's let it come down to this yellow boxed area here and see that setup occur. So until then, I got nothing. Hopefully, within this session, we do see something. So that's it from my end for now.
Yeah, I agree with what you said. Like the S&P 500, which is the market you just showed, looks very similar to the NASDAQ, and it looks like an inside day. Like especially after the big sell-offs lately.
Yeah, I think people are quite hesitant. They're going to feel the market out a bit. I think a lot of people are going to... No one really wants to put too much money on the line, especially after the big sell-off yesterday and the day before.
Yeah.
So
people are hesitant now.
Yeah, and we got NFP as well on Friday, so I wouldn't be surprised if it doesn't really pick up until next week after NFP. But we'll see what happens,
Yeah, like NFP is there's one trading day that for me or one news event that just messes up the whole day, and that's core CPI. Oh man, core CPI, like especially if you get a huge spike, which is obviously before the market opened. Then the rest of the day is just a mess. It's just like it's tricky because it's already moved. Like everything you look at, like say you look at the daily ATR, how much has it moved so far, and so on. It's just completely skewed. Everything's just messed up because the news event just messed it all up. But it's the same with these
FOMC.
FOMC. They like
FOMC is another brutal one.
I
it's
hate
brutal, but
FOMC week. The whole week, I hate it. I don't like it.
I know, like but that specific day, that particular day, it's like, it's just rough. It's very choppy, and it's like nothing. The market just doesn't respect anything, like any levels, like everything just goes wrong.
You can see the
indecision. I think this Friday, NFP is going to catch quite a few traders off guard, because I mean, we had obviously like the new tariff laws that kicked in, or that was announced the day before yesterday. And now a lot of eyes are going to be on that, because there's trade wars going on right now between America, China, and Canada. And investors, traders, everyone's going to be looking at data to indicate if, the tariffs are going to help the American economy or not. So employment data, interest rate decision, like, they are going to have very brutal effects on the market these next few weeks. Even if, because a lot of people are right now, they're very much fearful they're really fearful of the dollar. And it's pretty evident, because we've seen the gold has been bullish for predominantly the whole year now. Well, since the start of the year, we've seen a very bullish gold. So a lot of investors are sort of like putting money into gold, trying to get away from the dollar, because right now people just don't know what's going on, especially with what Trump's doing.
Yeah.
No, yeah, very true. Very true. I mean, sometimes I wish they would, like, there's just one day of the month and they just like release everything, like non-farm payrolls, like core CPI, like interest, everything is just on a Saturday.
Just on a Saturday. How beautiful and boring would that be?
Yeah. True. But I'm just like looking at the market.
And then the market opens on Sunday night with a huge gap because of that.
Yeah, but by the time the market opens, everybody's kind of over themselves, and people start to find direction. But I'm just looking at the charts here, and it's really, really slow, very slow. Like just nothing happening. Maybe I hope something's gonna start to pick up after 7 minutes from now.
Well, yeah. But you know what? I like a bit more.
Let me quickly talk about my Bitcoin position, actually, because I'm currently just like bullish on this for. I'll show you. One second. Yeah, of course.
Cheers. We got a few sessions. Robert, he was in the yesterday session. Nice to see you again, Robert. He goes, Sam is the GOAT. I truly appreciate that. Thank you, Robert. And Kabir says, really enjoying the session today. Thank you, Kabir. Thank you. I hope you stick around for most of it. It should be very, very, very good. All right, Walter, take it away.
Yeah, so I mean, this one is one of my simplest setups that most of the time
that was my bad. Sorry, go on.
No, it's all good. It's all good.
Sam the GOAT made a mistake. No.
I know. I will never forgive myself for that.
It's all good. I forgive you, man.
Sorry,
you're forgiven. But yeah, so this is a more simpler setup with Bitcoin. I mean, right now, obviously, what we've seen with especially the last few days, we saw this huge rally that took place on Monday. That the market corrected itself, basically just came back down to the Friday lows, took out the Friday lows, and now what we're seeing is a move back up. And I do see this being like some sort of a recovery. Bitcoin predominantly has been bullish again so far this year. So right now what I'm looking at is, again, I just look at the 15 minutes, 30 minutes, and I use that to feed into sort of like either trades that I can hold for a short period of time, or something that could potentially play off over a longer time horizon. But right now, what is very clear to me is that this is a bullish cycle going on with Bitcoin on both the 15 and the 30 minutes time frame. Right now, price is traded into a key area of interest for me, which is essentially on the 30 minutes. It's a bullish order block. It's a major area of interest. And what I'm anticipating, and this moves, if this plays off as typically it does, this would potentially be an aggressive move to the upside. And if and when that sort of move to the upside takes place, I do have a few targets in mind. So my main primary target is the relative equal highs. So these equal highs that was created when the market came up on Sunday and tapped this high, but didn't take it out, right? So It left its relative equal highs, major source of buy side liquidity pool above these highs. We also have like a bunch of highs here as well, and we have a major high up here as well. So these are three areas that I do see that, you know, if we do see a continuation, Bitcoin will most likely take out these three highs. But my primary target is this relative equal high. So that's what I'm aiming for with this 15 minutes setup. So yeah, so essentially went long at the order block. So I went long when market came all the way down here, right into this mini range, tapped into that mini range, stop loss went below the low. And then my target is equal highs. Again, just looking at something simple, nice 1 to 2 on that trade. So yeah, so that's the setup on Bitcoin for me. Very simple, very straightforward. Yeah, and right now I'm just waiting for it to play out.
Very nice, very nice. How do you find trading Bitcoin? Bitcoin always scared me, I'll be honest. I'm terrified.
It used to back in the days a while ago, but I only started trading this towards the end of last year, and I did so by mistake because I have a friend actually looked at Bitcoin quite a lot, and he was curious to see if my strategy worked in line with Bitcoin dollar. So I would like sit down with him and I'll look through stuff with him. I'll be like, this is what I look at. And then I'm just like, wait a second, this is respecting the levels really well. I'm just like, this is moving in a very clean way, even a lot cleaner than euro dollar and pound dollar. So yeah, so then I started like doing a deeper look into it, and I realized that, hold up, this is really, really clean. This really respects levels in a way that I don't really see a lot of other, like pound dollar, euro dollar used to respect levels like that like 4 or 5 years ago. But now they just, I don't know what they're on these days. So I don't really touch those pairs. So yeah, so that's when it's sort of like I started to actually look at Bitcoin more, and then I started trading it. And then yeah, and I was actually, so I became profitable within my first month of trading Bitcoin because I just had a standalone account, and that account was just like Bitcoin dollar to see how well I can perform with it. I did really well with it. I was like, oh, this is going to be a new product that I trade. So yeah, so far it's doing really well. It moves beautifully, and I think this was obviously after the ETFs that launched last year. A lot more institutional capital went into it, so it's a lot less amateur traders, because one thing people forget is, like with a lot of like crypto tokens or coins or meme coins or whatever that people trade, is that a lot of the people that actually tend to trade these products are amateurs or people that don't know how to trade at all. And the reason that's problematic is, if let's say a 14-year-old kid buys like some sort of like a token, for example, and that token just whatever, like, I don't know, 10x, 20x. Now, for that 14-year-old kid, they've never seen that kind of money before, but they also have a very little idea of like the depth of market, right? They don't understand what that even means. So the initial reaction is, I want to sell all my coins right now, right? And they don't realize that if the market doesn't have the depth to absorb all, yes, what you're looking at on your wallet is you're looking at maybe $500,000 profit, right? But if the depth of market isn't there, then what you're going to have is a major slippage, and the price is going to immediately drop before your full order gets filled, and you are going to take a bit of a loss on that. You could potentially take a bit of a loss on that. So they just like dump all their positions at once without acknowledging what the depth of market is, and then price tanks. And that's why with a lot of crypto you see this erratic movement, because there's a lot of traders that are just, or people trading these products that either have no idea about how the markets run. Whereas if you look at something a bit more established, right? Obviously S&P, a lot of the majors for FX, gold to the dollar, right? Obviously a lot more professionals are involved in this market. You know, if a professional trader is holding a large position, they're not going to want to sell that large position immediately. What do? They sell it off bits at a time, right? They allow the market to absorb their trades. It minimizes slippage, and it prevents them from being noticed too fast. Because if someone notices them selling off too fast, then someone could take advantage of that, of their sell positions. So yeah, so professionals take the time with selling, whereas amateurs, they just like, I want to capitalize, I want to liquidate right now, and they just like offload all their positions at once. So so that's why I don't really trade. I don't touch any other crypto market. I don't touch meme coins. I know quite a few people like to trade meme coins, but I find there's way too many kids, way too many degenerates that invest and trade these products. It's just not fun for someone that prefers to read the market and actually find some sort of market flow and trade in line with that market flow. But yeah.
No, I totally agree. I think the issue I had with Bitcoin, you're right, it is actually a lot more stable than people initially think. I think it's because it comes from multiple exchanges it's traded. I don't get the most accurate volume data, and if I feel I don't see 100% of the true volume, I get cautious trading something because I might be missing something. So I have like played around with Bitcoin, and you're right, it's actually very stable in a strange way. It respects levels very well. But then there are random times where it would just like, what happened?
Yeah, and it like it moves
recently.
If you're on the wrong side of that, it's like your heart beats like you're being chased by a lion, you know. Like it's
That's
like,
why
Walt, I was going to ask you, Walter, are you on any like blood pressure medication, or how do you stay so calm trading Bitcoin? How do you do that, man?
I just
tell us
over leverage.
We all want to know.
I just don't over leverage. That's all. like those heart attacks pops in when you're over rest, and like I just go in 1% per trade. If it works out, it works out. If it doesn't work out, it doesn't work out. And a lot of it's like something like this, right? So this was on Sunday. Like I don't like the good thing about Bitcoin obviously is that it's open over the weekend. So if you're a trader that would like to obviously always be active, then you can trade this over the weekend. But for me, I'm just like, I like to have a relaxed weekend. I like to sleep like a baby on the Saturday and Sunday night without thinking about some sort of position I have in the market. Because if I was like, I woke up in the morning on Monday morning, and a friend of mine, he messaged me at midnight when this happened, and is like, "How are you feeling? Did you see Bitcoin?" And I didn't initially know what it was talking about until I opened my chat and I saw Bitcoin. I was like, "Oh, this happened." And I was like, "What do you mean I'm feeling? I just woke up. I'm feeling good." I wasn't exposed to any of this, so But if you're someone that is like super exposed to this, and you were short on Sunday, and you're like, "Oh no, this is gonna keep going down," then yeah, you probably would have woken up the next day with a bit of a heart attack.
Oh, absolutely.
Yeah.
To let you all know, ISM has dropped a few minutes ago. Didn't cause a massive, it was positive, but hasn't caused a huge. The S&P 500 spiked up, I don't know how many points, but talking like 140 points or something, nothing too massive. But it does seem to be waking up a bit. I do think people are waiting just for that to pass, and we should start seeing potentially some activity. Because
activity, also I won't be surprised if something comes alive only in the third session, second, or late in the day, before it starts to find direction.
It's hard to time, especially on live sessions, but the stuff you do before entering a trade, I think, is just as important as when you are entering a trade or in a trade.
Absolutely.
So
even more important.
Yeah, even more. So it's good to see. But this is the reality of trading, right? A lot of time you're just sitting here. It's actually quite fun now because, I get to talk to two other traders rather than just wait for nothing.
Absolutely. People always with outsiders ask me, what's it like to trade? And I'm like, it's like being a security guard, to be honest. You sit there and you wait for some action.
I've never heard that one before. Oh my god!
Can someone please shoplift something that I can make an arrest? Like, it's boring. You have to sit and wait. So the patience is a big part, right? The patience, the discipline.
Yeah,
I absolutely love
that's
that.
funny.
I love that. Being a security guard, it's so true.
Yeah, because I think sometimes people, when you tell someone like you trade, I think they have this idea in their head of a very active trading floor where you're like on the phone, or you're speaking to like 5 clients and you're doing all these things constantly. But the reality is you're just like sitting in front of your charts 80% of the time doing absolutely nothing. You've done your analysis. You're waiting for price to get to your AOI or to do something interesting, or you're in a trade and it doesn't move straight away, and you're just waiting for something to happen. Like is 80% waiting and 20% preparation.
It's the two extremes. Like people have perceptions of traders, two extremes. Either, like you mentioned, we're all just shouting and screaming on the phone. I don't know why, if you're a day trader, you'd need to pick up the phone, but never mind. You're not making any orders to a broker live on a phone anymore. But
we're not market dealers.
Yeah.
Or it's you're cruising in a car with your phone and you're placing trades in the back seat or something. Again, very unrealistic. It's like neither of the two are really true. I mean, you're literally sitting in front of a screen on a computer in your home office for a few hours a day, quite bored, and then something happens and
then something happened.
Yeah.
Well, I mean, So this, I mean, there's a lot of, especially people who haven't been trading for a long time. They do come in with unrealistic expectations. That's a big problem. Like, I just want to make $100. I just want to make $100 a day. That's a very common one. I just want to make $100 a day. Like, dude, it doesn't work like that. You don't know what you're gonna get. You don't know what the markets are going to look like. And if you do chase that $100. You're going to, if your first trade is a losing trade and you went in with the expectation of, I want to make $100 for the day, the likelihood is very high that you're going to place that second trade because you're going to chase that $100 for the day.
Exactly.
And then you end up with a very unwanted drawdown that's going to take you a while to get out of. It's just not worth it, So it's always about focus on process, not the outcome.
And people will say, I want to make $100 a day. When they have a $200 account, and it's it's like never gonna happen, man. You might get lucky one or two times, sure, like anything possible, right? But not consistently, man. You're gonna blow your account.
I always pray people like that they don't get lucky, because all that does is it adds positive reinforcement to bad behavior. So then they get lucky once, they think, oh, I've done it once, I can do it again. So even if they blow their account that first time, they refresh it. They're like, okay, this time it's going to happen. And then they blow that again. And then they just keep doing that. And then maybe they get lucky after like the 5th time they refresh their account. And again, that's positive reinforcement for bad behavior. And that's how gamblers become gamblers, essentially.
Yeah,
right?
sure.
So sometimes it's not good when people get lucky at an early stage.
Absolutely.
But I think so the model of the story is patience is a big part of the waiting right for the right opportunity. But it also comes with frustration, because you can sit and wait, and there's the opportunity, and it may not work. Not work. So anyway.
I think you got to treat every win and loss in the same equal playing field, right?
Yes.
If you have a loss, don't go chasing, trying to make up that loss, right? Because if you have a win, how many people? Well, some people do, but generally speaking, if you have a good trade, you're happy for the day, you walk away. At least that's how I do it, right? But if you have a loss, you should apply the same logic. Walk away.
Yeah.
Yes, exactly. Don't go chasing it.
Yeah, because psychologically, they both equally dangerous. They as like having a very good day is as dangerous as having a bad day, because you're not like, if you're very excited and happy, you can be you can get overconfident and you can place another trade and you can just give it all back. So either side of the spectrum is very dangerous. You need to be in that neutral spot, and the best way to do that is just to, like you said, Sam, when you get that trade, you walk away, whether it's a good trade or not a good trade. You take that trade. It's based on the things you were waiting for. You followed the process. What happens from that point onwards is completely out of your control. You don't know if it's going to work. You don't know if it's going to work. So the outcome is the last thing that should affect you. The only thing that you should focus on, again, is just the process.
Yeah, absolutely. I want to mention.
So this is where having a really.
Sorry, I want to mention, Walter, you have a fan in the chat. I can't quite say the name. Turlich. Sorry if I'm butchering your name. He says, Walter, the pound for pound gold/Bitcoin legend.
Well, hang on. It depends on how much he weighs.
I weighed myself 2 days ago. I wasn't happy about what I saw. I wasn't happy at all. Now I'm actually fasting to get rid of the excess gold in my pockets. But
it's the goal.
You're making us look bad.
You know, so.
Okay.
But yeah. I was gonna add on, like, you know, what you mentioned earlier about obviously like someone like walking away from a trade. You know, it goes down to having a proper trading plan. Because if you have a plan that says you only take one setup a day, like I have a whiteboard right behind me, and you know, I have 4 key points of my trading plan that I always want to be reminded for. And one of those key points is 1 setup per session. And this is what I aim for. So I trade predominantly Asia and London session. And if I take a trade in Asia, that's it, I'm done for the session. I move on with my day. If I take a trade in London, I'm done for the session. I move on with my day. So I'm not looking to like take a trade and then it hits TP maybe like within 30 minutes. And then you're like, I think the worst trades are the ones that hit TP really fast. Personally, I like the trades that I get in, and it might take like 2, 3, maybe even 4 hours to hit TP. But I like those trades because I'm like, okay, like I actually feel like even though I'm doing nothing technically, I feel like I'm working. Whereas if I get into a trade and it hits TP within 10 minutes, I'm just like, that's my day done. I feel a bit like I haven't accomplished anything. You know, yes, I made some money, but that can't just be it, right?
That's true. It's like when you're like if you're a pilot, right? The most difficult part is the takeoff and landing. The rest is just cruising.
Yeah, right.
So once you've made that decision of getting into the trade, that's the hard part. Is done now, and it's moving in your favor. Now you can just relax and
exactly.
You can just relax. Well, I'm like I'm kind of like opposite. I don't like to be in a trade very long.
Me too. I was going to say, I totally get what Walter's saying, but if it's 10 minutes, I am happy. Like, I wish every trade would last 10 minutes.
Like
I'm okay with it for hours. Just don't ask me to hold a trade for 2-3 days. Like I can't do that.
It's interesting. I mean, like there are so many different ways and styles of trading. There will be other people who they love to be in a trade for 2-3 days, you know, or longer. Or longer than that, then you start to invest. You're not trading anymore.
That's a whole different story.
Yeah, that's completely different. But personally, if I can get into a trade and just moves very quickly, then I'm like, oh, great, nice, done.
Done.
Yeah. But
different trading styles, right? Different trading styles. The scalpers, we want quick trades, quick, straight to the TP. Beautiful. Doesn't always happen.
Day traders, we want our days to feel fulfilled. You know, even if a trade takes the whole day to hit TP, I'm happy. It feels like I've worked for the whole day, even though I've technically done nothing.
But yes, no, you're right. But that's also like, you know, what you just mentioned about like you're in a trade and you feel like you're doing something. That's also, you know, a big reason for over trading is when you're not in a trade and people feel like they should be doing something. I should be in a trade. I should be doing something. Then I haven't placed any trades, and then you kind of force trades, and
then they like look for things that actually isn't there.
Because you just feel like you have to like justify the day, like I've done something, even though it was 8 losses. At least I've done something, which is, you know, it's not.
You've gone backwards. That's where you've gone. For me, like a day where. And this is the thing, is like defining what a winning day actually is. So for me, a win day, technically speaking, is not necessarily a day where I end the market flush, or I end my day with profit. My definition of a winning trading day is a day where I stick to my trading plan. So if I can end the day and I can confidently, because I have an Excel sheet, I have checks and balances in place. And if I can look back on my day and be like, okay, I've stuck to my trading, even if I didn't take a trade, and I didn't take a trade because there was no setup, then I've stuck to my trading plan. And for me, that's a winning day. If I take a trade and it results in a loss, that's still a winning day because I stuck to my trading plan. And if I take a trade and it results in a profit, it's also a winning day because I stuck to my trading plan. But if I deviate from my trading plan and I miss a trade, or I take maybe 2 or 3 trades that I shouldn't have taken, or even I take a winning trade by mistake, that's for me counts as a losing trading day. because I deviated.
But that's a happy mistake. That's a happy mistake. Like, ooh, I shouldn't have done that.
And happy mistakes are nice, but
should have done that.
It's positive reinforcement for bad behavior.
Yeah,
and it sets a precedent to do things in the future that to deviate from your trading plan in the future. Like, well, it's worked out for me once, so I can do it this time. Maybe it's going to work out for me again. And the thing is, like, once you set a precedent, it's very easy to keep deviating from your plan in the future. And that's definitely something that, you know, is very important to avoid at all costs.
Yeah, I fully agree.
Million percent agree. Yeah. Like even yesterday on a trade, I didn't get stopped out, but I got out at a small loss. I was in a critical area. I was in profit. It started reversing on me. Didn't like what I was seeing. I got out. And then maybe like 10, 20 minutes later, this was actually on a live session. Maybe 10, 20 minutes later, I saw another very good opportunity. And there was a part of me that wanted to take it, right? But I knew, no, I'll be breaking my own rules. Do you know what I mean? Breaking my own rules of one trade, leave it there. Do not try and chase a loss. And all right, the trade did work out. If I did take it, it would have been great. But you're reinforcing, because then next time you come up in that situation, it might not work out. And now you got 2 losses in a row. Do you see what I mean? So you have to stick to your guns with it, even if it is. You got to be honest with yourself and be really disciplined. Yeah. So 1,000,000% agree with that, Walter. That's very good advice.
And it's sometimes it can be very difficult to do in real time as the price action unfolds in front of you.
Absolutely,
You know, that's because there's always you know, when you scroll back on the charts or you do back testing and so on, and you mark all the winning trades and the losing trades, the price action is not unfolding in front of you. It's already happened.
Yeah.
So when you come and you know, now you're being exposed to the live markets and price action is unfolding in front of you, the execution will be different to your back testing, what you've done in your back testing. It won't, you know, because now there are emotions involved, and now it's like, oh, but it could go there. What if, you know, that your mind plays tricks on you? So again, it just comes back to, like you said, Walter, it's just that discipline. You gotta stick to your trading plan.
Yeah, and it's hard. It is hard. I mean,
of course, trading is never easy.
Yeah, I mean, even if you're many years down the line into it, and there can be times you can almost relapse. Do you know what I mean? Where you're not really disciplined.
You make us sound like addicts, man. Relapse.
I mean,
Like, are you an addict?
Kind of in a weird way.
Where's your little tag saying, "Hi, my name is Sam."
Exactly.
I'm a trading addict.
Look, but even for experienced traders, you know, that a losing streak is very tough to handle psychologically, because you can a couple of losing trades in a row. Like if you have 3 losing trades in a row, there is, of course, there's doubt kicking in and things like, you know, just normal emotions that kick in. That's consistent with what you've experienced, your results. So a lack of experience, if you don't have a lot of experience, then it's very easy just to completely dump what you've been doing, completely throw the strategy in the bin, and then try to trade something else. You know, find a new strategy, find a new indicator, find something else, or try to follow someone new, because what you've been doing, you've had now 3 losses in a row, so that's clearly not working. So, you know, but you have to see it through. And I suppose, like, the only way to do that is to stick to one thing and trade it for long enough until you have a batch of trades, so you can know what drawdown you can expect, how many losses in a row can you realistically expect.
I mean, from my experience, if you lose once, the moment you're trying to chase that win again, you're going to lose again, and it will just get worse. You're digging yourself a grave. Do you know what I mean? You might as well just go outside and hand your money to someone in need at that point. Do you know what I mean? Like, give it away.
Look, I mean, I don't know what the S&P 500 is looking on your side, but on my side, this if I look at the NASDAQ.
You can share. I'll stop sharing. You guys can share.
Sure.
Since the open, it's basically trading. Let me just have a look.
We're pretty much in a range right now on my end.
Yeah.
If I pull it up real quick. Yeah, you can see it better on the actual candlestick chart. I mean, the ISM, it did dip down back into that yellow area, but obviously ISM literally came out right. That's the candle, the ISM came out, shot up a bit. It's just kind of ranging in this kind of area. I see nothing. No one is really being brave enough by the looks of it. The volume is quite low. I mean, you're getting a bit of spikes and volumes here and there, but it's not working out really for anyone. I'm going to let it play out. But when I see the volume pick up, if I see one, like, you know, a group of people or a large chunk of people getting trapped, I will be very quick to jump in. I mean, it could happen any minute now.
I can see it's starting to move now.
I did draw these two black lines because I saw people getting trapped. Now, it closed at 516, but it went well over 1.5 thousand contracts. And then it got absorbed by the buyers very quickly. But again, we're seeing a bit bigger 700, but it's nothing I would feel confident about yet. I'm seeing absorption again happen. You can see the numbers dropping back down again. It's a lot of limit orders being, you know, sellers selling into limit orders, basically buy limit orders. But until I see like the really big numbers coming in, it's a waiting game. We really don't have much. Had a few here, but that was again news based. That was, you know, from the ISM, so I'm kind of disregarding it. Anything news based, very hard to figure out what the hell happened on news because you got a lot of people exiting, which also, you know, comes up on the footprint, and you got maybe a few people jumping in, so it can be very confusing to read. But yeah, I'll say maybe another hour or so, maybe there'll be something. But as of yet, it's very boring.
Yeah, it's boring on this side. I see this pretty much the same on the NASDAQ. It's just, it's pretty much where it was at the open right now for me.
Yeah. It's pretty literally ranged.
Yeah. So I do see it, you know, there's a couple of like, if you can, you know, if you into VWAP trading, just bounce off the 2 standard deviation. I don't really like to take those trades. I do want to see confluence on multiple time frames. That's just personal preference. But I do know people that would love to trade these little. Can I show you quickly?
Yeah, absolutely. Please do.
If I just show you what I'm talking about, where is this? Oh, I should know how to do this by now. It's the third time. Okay. So this is what I mean. Like if you you can't see my screen yet.
There we go.
This is what I mean. Like if you're in a range like this. And it bounces here in the 2 standard deviations, just right here as well. You know, just testing the 2 standard deviation and then just bouncing right back up. But the issue I have with these trades is you don't really have. There's not great risk reward ratio potential. So if I take 3 of them and you know, it's like 50-50 in a 1-to-1 risk reward ratio. You're not really making any progress. But that's just me. I know there are some micro scalpers who love to take these small little moves.
Yeah,
it doesn't work for me. I'm not into 80% win rates, small risk. You know, with a skewed risk reward ratio. In other words, your winners are smaller than your losers. That doesn't work for me.
It's very hard to do that, especially with a spread as well, and all commission. When you actually work it out, if you're doing the scalping, like micro scalping, you need like at least over 80% just to break even. Very hard. And just the spread takes most of your money. Do you know what I mean?
Yeah. Exactly. The spread takes most of your money. Yeah, exactly. That's the problem. I don't know. I know there's a lot of people who say they're very successful with these those scalping techniques. I think. Excuse me. Scalping is still, I believe what I do is a form of scalping because I'm not in a trade for very long, but I don't scalp for these little micro ticks, or, you know, a couple of points, because all you need is one bad day with a couple of losses. That's twice the size of your winners. And then you're back where you were 2 weeks ago. Like, oh man.
Absolutely.
What worse is you?
I mean, my average trade's probably 20 to 40 minutes I'm in it. So I don't know if that technically constitutes a scalping, but it's kind of in between scalping and like very short intraday trading. But I call it more scalping.
Yeah, it is. That is scalping. I would say that's scalping. Yeah.
Because I think a lot of people, when they hear scalping, they think like 1-2 minutes, like what you mentioned, like
the like
micro scalping. Yeah, not realistic again. Like very hard to predict what's going to happen in the next minute. You still need a bit of. Do you know what I mean?
Yeah, I want some backup. I want some backup from a longer time frame, and then I'll just ride a short wave within that. Whatever I see in a longer time frame. But you can clearly see here as well. We are on the half an hour. We're like hitting a support level over here, and on the 1 hour. But I personally don't like these particular setups because look at the 15-minute time frame. I know we are in a sideways range, and the 1 minute to me is completely messy. So you just don't. I mean, if I really want to and I stay long enough, I'm pretty sure I can force a trade, no problem. But in terms of looking for high probability setups, there's definitely nothing. Yeah.
No, definitely, I agree. It's kind of a shame because we're running out of time. I think we got 20 minutes left before the session ends. Hopefully, something picks up. But you're right; it's ranging. No one is actually really putting money on the line at the moment. Everyone's very super cautious, which I get. I mean,
it's a very cautious market right now.
Yesterday was ridiculous in terms of volume. I was seeing 4,000-5,000 contracts on a single price level. Very rare to see something like that. So yesterday was extreme. I think people are a bit holding back. I think it took. Yesterday got a lot of people. Caught a lot of people out, I think, on the S&P 500. So I think there is a bit of indecision and caution today, which is natural. But hopefully someone is brave enough to make the move and lead the way.
Yeah.
So I can jump on the bandwagon and, collect the crumbs that fall down to retail traders like ours.
Yeah, it's very interesting that you use those words because that's exactly what I used to say. Like, no, I just wait for them all to kind of kill each other, and then I'll just go afterwards and pick up the crumbs.
Literally, that's all we're doing. Yeah,
pick up the crumbs for sure. All right. Well, and is Bitcoin doing anything or gold, or are you experiencing something similar to what we are seeing here?
No, I mean there's been a lot of there's a lot of liquidity in Bitcoin and gold this past few weeks. So I've been pretty much consistently getting setups almost every day, and on days like the setups are moving, looking at 1.4, 1.5 hour on those setups. There are days where it's a bit quiet, like I think like last week on Wednesday it was a little bit quiet for gold, but then it picked up again. So I found gold very pleasant this time of the year. It's been really, really good. But again, it's not always like this. There are times when gold might consolidate for 4 or 5 days, and then on day 6 it like makes the big move, and then it consolidates again and then makes that big move. But it's been very steady. There's a lot of liquidity in it right now.
Okay. Yeah, I don't know. You focus just on those two markets, right? It's just Bitcoin and gold. Is it just those two markets?
That's right.
Yeah,
that's right.
It does make it easier when you just focus on one or two.
Yeah, 100%. Yeah. I mean, a few years ago, I used to trade 14 pairs, and my God, I don't know how I did that, but I know how I did that. I wasn't making money at all. That's how I did that. But my profitability, like everything changed when I scaled all the way down initially to 3 pairs, and then 2 pairs, and then 1 pairs, and that's when I was like, whoa, less is more. This is the secret all along. But yeah, like just mastering that 1 or 2 currency for me was like the big game changer in my trading. And ever since then, I haven't really looked back. I've always sort of like kept what I look at and what I trade to 1 or 2 pairs max.
Yeah.
Do you know what was my turning point? I've been trading since 2004. So
right.
I was a young man back then. I'm getting old now, but anyway,
I thought you
I
still
was.
were, man. I thought you still are a young man.
Well, yeah, I am. Of course, I am. But I'm a little bit older than what I
Someone told
was
me
back
you were
then.
25, but you know, I don't know. I don't know how true that is.
Believe them. Believe them. Every word they say. But the turning point for me was just to trade far less, you know, and just you know, and it's that was very difficult for me to do for a long time, and I messed around with so many different ideas. Oh my goodness, different pairs, different time frames, different this, different times of the day. And then I went down the EA route, which was a complete disaster.
Yeah.
You try to automate things, and then like, oh well, you know, if you can have your rules so specific, then surely you can automate it. That's the logic. But it doesn't work because you still need that discretionary element, your personal judgment. You know, I still believe that's important.
Yeah.
So yeah, but it took a very, very long time for me to finally like just relax, stand back. It was almost like I'm done with this moment, you know. I'm done with this trading thing, kind of like I don't really care. Oh, I'm not going to pay that much attention, and then start to trade much less, and then all of a sudden, okay, what's going on here? What's going on here? Like I'm profitable, you know. Yeah. So it really is like you do not need to trade a lot, and you know, your trading will turn around just like that. Because if you don't trade for 2 days, guess what? You just broke even.
Yeah.
Speak to 90% of other traders. They probably lost money during the last 2 days. So,
yeah. I think there might be a trade. Let me just share my screen real quick.
Okay.
Sorry to interrupt. No, it's fine. Quickly share before it runs away. Right. I saw some heavy volume coming from the sellers just as I wanted originally. And it's starting to move against them. I just want to see them start scrambling. I don't think this 800 here is necessarily these people getting out. It's too close. I don't think they're going to be that nervous because it goes one little price level above. But we're getting a bit heavy volume from the sellers. I want to see it kind of push up a little bit and then just see those numbers on the buy side get a bit higher.
Oh, Sam, we can't see your screen.
Oh, sugar. All right. Well, sorry. Okay.
Don't call me sugar.
Okay. We're starting to see it. I think I'll be happy to enter 1/4 of my position here. Okay. So real quick, I'm seeing those sellers getting, you know, there was a bit more heavy volume coming in from the sellers here. It's still not as strong enough volume that I originally wanted, but it's something. And as it starts moving against them, I am seeing more buyers coming in, and they're not really new buyers. It's more these sellers exiting. So there was a bit of trappage going on, so to speak. But as of now, there would have to be a very tight stop of, you know, literally just below here. Take profit right now. I mean, could be, you know, any of the latest highs really, but it really depends on, I mean, ultimate best take profit can be like up here, but I will naturally be looking at these highs as well. And just really looking at the trade, making sure, you know, nothing terrible's happened. This 1.06K and this 885, I never let my stop loss truly get hit. If it goes below here and I start seeing sell pressure come in, I will be getting out this trade. So the stop is really there just if some sort of freak thing happens where the market just, you know, sometimes gaps and goes a bit crazy. My stop should catch it. But apart from that, yeah, the stop really shouldn't be hit. I wouldn't be happy if it starts dipping below this area. I hope you guys can see it where it says 1.06K. If it starts dipping, I'm not happy. It can like get near it and kind of dip a little bit, but if I see like heavy selling coming in again, then the sellers are really trying to push it down and the buyers might not be able to defend too well. So I'll get out the market. Ideally, I want to see it break through these sellers here until it breaks above that 947. I wouldn't be looking at putting another position on. So this is just would be 1/4 of the position. If it starts getting above here and those sellers, if they're still in the market, start getting squeezed out, we can add another position and just basically follow the trade as it hopefully just nice and casually goes up until it reaches a point where I can see, you know, sellers are coming in with a lot of pressure. So we're getting into that area now. This should be interesting. They got absorbed pretty quick the moment it touched it there. The sellers defended that area quite well, but that was to be expected. You know, it's going to take a bit more aggression from the buyers to really push through there. So we're going to let them have a few more tries. But again, I play it very fluid. If I see that it's just not happening, the buyers just don't have enough strength to get through, and the sellers absorbing every bit of buy pressure, I'll get out as well. Even if it's at break even, a tiny win, it doesn't matter. The first position is more to feel the market out. If it's not really going, you know, working and you're not seeing that strength come in, be happy to get out, wait again. There might be a better opportunity to jump in. So when I say I only do one trade a day, I mean like one setup, right? Obviously, I can get in and out if it didn't work out right away, because it might consolidate a bit and there might be like an even better one, a better price point I can get in, but I still regard it in the same trade, if that makes sense, right? It's still the same setup, the same kind of move. But yeah, but once the move is over, for example, say it now shoots up and it's, you know, up here somewhere, I'm not looking at getting in, right? Or if it, you know, starts going down and that trade just didn't work out, again, I'm not looking at jumping in. I'll only kind of take that move as one trade. But yeah, so at this point, I would just literally be looking at the raw numbers. I'm really hoping it can break above that area there. If it can, then we do have something. But if it doesn't, no big deal. We'll probably get out and wait for, you know, more buyers' aggression. But the sellers are protecting that area and the buyers are just being a bit hesitant. I want to see a bit more volume, a bit more strength from them. And then I will be happy to drop another position above it if we can get it. There we go. Come on, a bit more power there. But they're getting absorbed. You can see that number dropping. 400 from the buyers. Straight away dropped to 200. That's absorption happening. 300 are starting to push a bit stronger. Now I want to see these bigger numbers, closer to 900. Similar kind of figures on the buy side, indicating these sellers are, you know, giving up, basically getting out the market. Kind of went above, but the sellers pushed it down again a bit. You can see the numbers went quite high and then dropped down again on the buy side. I want to see those buy numbers get higher. 500 is getting a bit better, but it's dropping back down to 394. 500 is good. 4, 5. Want to see it get a bit stronger. The sellers are still absorbing it quite well. And that's literally all it is. So it is very intense when I am in a trade. It can be very, very intense. But that's looking a bit better. 700, I quite like that. It's dropped to still a bit of absorption. I think they're getting in. I can add another position now. My stops now are never, of course, you know, no way will it. My stop will be below like that 1,000. There's no way I'm letting it get near my stop originally. And I'm just basically monitoring it as it goes up, the absorption, and looking for potential areas where, you know, hey, look, there's a 1.15K from the sellers here. I know there's going to be resistance there. I know it's going to struggle when it gets there. And again, I will be watching it. If it looks like the sellers are coming in very strong in these heavy areas, there's another 700 here, literally where it stopped. Again, we're seeing a bit of seller pressure coming in. It's not too terrible. The buyers still kind of have a bit of volume, but I'm literally just monitoring it as it happens, right? And my absolute get the hell out would be definitely around 1.06 below there. I wouldn't want it to go anywhere near there. If it starts getting below that 500 where we are at now, I want to see buyers defending that area a bit more. You can see them, they're starting to defend it, jumping up 61. The sellers are trying to push it down, but the buyers are absorbing it. So I literally make decisions on the fly as it comes. I can never take my eye off it, so I know I'm just rambling on at this point.
No, like it's great. Like you can also do part-time, like what do you know, like an auctioneer?
Like literally an auctioneer. Yeah, turn into an
that'd be
auctioneer.
great.
Like, number 2, number 3. Yeah, I got another 5.
I was thinking that for a second. I was just like, this is like an auction house in real time.
No, but it's good. It's very good to to hear that, and especially for people watching, to see what you're looking at, and in real time.
Absolutely. Yeah, and I want to see the buyers come in defending this. They're starting to defend it a bit, but they're getting a bit weaker. So I'm already like, I don't like how the sellers are able to overpower the buyers a bit here. But we're going to give them a few more seconds, give them a bit of a chance. Don't want to be too hasty. Let them have a opportunity. But yeah, realistically speaking, like I said, I wouldn't want it to go anywhere near my stop loss. I could technically cancel it, but then you'll be leaving yourself open if anything freak happens. Obviously, you have to have a hard stop because you can't react very fast if something crazy happens. But the buyers are absorbing it. Now, I would use the depth of market as well. This is not the greatest depth of market. It only has one level. I do have a different depth of market from a different program, but it's on my other screen, so I can't really show both at the same time. So I am seeing a bit more information than what you can just see right now, helping me with these decisions. But yeah, okay, the buyers are starting to come in. I'm letting them defend it a bit. So really, you can see the defense of the buyers, but now they got absorbed pretty quickly, and there's the heavy selling. So that's definitely a point where you want to say, absolutely get out, right? You saw those sellers absorb the buyers. So that was a bit of a failed trade there. Didn't have enough momentum to push up. So in this case scenario, I still feel that this trade setup is still there. It might come back for a retest, and you will see a similar setup as it retests. So it went up, might come back for a retest, and there could be another opportunity to jump in, and it makes its move. So it's about sorry, go on. You're about to talk.
No, I was just going to say this is a very good example of like you do everything right, and when you do everything right, from the point you get into the trade, you've got no control whatsoever. So again, it's about process. You just need to make sure you do everything right, and then the outcome of the trade. If you start to want to have, you get emotionally attached about the outcome, which is something you've got no control over, you're gonna have a very difficult time.
Absolutely,
it's just part of it. It's a big part of it. You need to fall in love with losses. It's there. It will always be there. I mean, I say you need to fall in love with them. I don't like. I still to this day I don't like losses, but not nearly as bad as what it used to be. But I just know it's a big part of it. It's part of it. Like it is a part of it.
Yeah.
So, but anyway,
and there are ways you can not manipulate, but you can change the strategy to have more. So I like to catch a bit of a bigger swing, right? But there are areas where if I wanted to be really scalping on a shorter time frame, I kind of already knew there's going to be resistance here. Take your profit here. You can kind of, change the style up. But I know in the long run, it's more profitable to accept the smaller losses. And when you do catch a big, when it does happen and you catch the bigger legs, you're making 4, 5, 6 times what you would make on a small trade. You know what I mean? So in the long run, it is more profitable to let your win rate drop a bit, but you get bigger wins overall and smaller losses, than have like a higher win rate but smaller, higher win rate but smaller wins. It is still more profitable in the long run. But there are ways you can adapt to it, because once you have all this information, like I said, this area here, I knew there will be resistance. You can see heavy selling. This area here could be another resistance. So you could have done it like TP1, TP2 type thing, take off half your position, whatever it might be. But it's just too scalpy for me, that is. I'd rather let it run a bit. let it come back. The market is very sideways. You can see, actually, this is quite interesting. Buyers coming in again. So now the aggression of the buyers are finally coming in, but I wouldn't enter now. I would want to see a bit more of a pullback again, back into these areas. I always have like a reset zone, right, where I want it to come back to a certain area before I'm jumping in again, rather than like trying to chase it. Oh, heavy buying, jump in. I'm not going to fall for that trap. Let it come back down. Let me see, a similar occurrence like this happen again. I'll jump in again. And this time the buyers might have a bit more aggression to actually push the market up a bit better. But I think we're gone over time. But that's pretty much it for this session. Oh, wow.
Just quickly to, Robert, he mentioned me by name. So can I just say he mentioned me by name? Can I?
Go for it. Go for it.
Yeah, he did. Look, it's all there. He said thank you to Yanni. You're welcome, Robert.
You had to point that out, huh?
I had to, man. I had to. It's the highlight for me.
He's left. I'm reading all the comments right now from Robert. Thanks to Yanni. Oh yeah, it took many months. The losses strategy changing throughout. So there you go, Yanni. You do have a fan. I was feeling a bit bad. Walter had a fan. I had a fan. You are now.
Yeah. Everyone gets a fan.
Exactly.
Fan, especially in the summer. Yeah.
Wait a minute. Robert was my original fan. Robert, what's going on? You're meant to be on my side. Someone else has to be a fan of Yanni's.
He's moved over to the other side.
Oh man, they went long on Yanni. Yanni. Cut the Okay. Yeah. So there's nothing. I think Walter, you also didn't really get anything today. Experience the same kind of.
I'm long on Bitcoin right now.
Oh, sorry.
The position is still in play. So yeah, I mean, I'll probably, because for me it's nighttime here, so I'll be going to bed after this. I'll find out in the morning how it runs.
Oh, okay. All right,
guys. We do have to end the session, sadly. I really did enjoy both of your company. It's been great. We'll definitely be in another session in the future. But yeah, to all the viewers, we're going to have about a half an hour break, and then it will be the midday momentum. So yeah, tune in for that. Should be good. And yeah, this is, I guess, goodbye from all three of us, and we'll see you again very soon, hopefully. So thank you.
Thanks, guys.
Thanks, guys. Speak soon.
Take care.
Bye-bye.
Thank you.
Hello.
Hello, how you doing, Igor? Nice to see you.
I'm okay, thank you. How are you, Paul?
I'm all right. Just paying attention to the market, not trying to get too confused.
Excellent. The best choice, yes.
So do you want to kick off things today? I'm sure you've got a lot to talk about.
Yes. As you know, the last time when we watched the market, we watched Aussie dollar and talk a little bit about news, what will happen. And really, there was a very good news for Australian market. And something very valuable happened there because Australia's economy ends 21st month per capita recession as GDP grows faster than population. That was the major news everywhere on the internet. And of course, GDP was 0.6%. Previous GDP percentage was 0.3. And because of that, we have really good result from Australian market and Australian dollar push. So my trade is really positive right now, maybe 100 pips from the entry point. So it's a good trade and a good example how fundamentals are can be very beneficial in trading. So it was a really good trade. But all US dollar pairs are on the right direction right now because the US dollar just went down, and so people cannot miss. You can trade whatever you want. You can buy euro dollar, British pound dollar, whatever, and for all major pairs we have a bullish trend right now. So it's easy to trade right now in a bull market for the Forex right now. How's situation for the Bitcoin, Paul?
Well, I tell you what, I've got a chart for you which involves the dollar, and then once we've looked at that, perhaps you can show us what you're looking at today, and then we can end with a bit of talk on crypto. Does that work for you?
Yes, beautiful. Please share.
I did a chart just for you, right? So let's have a look. Let's see if I can share my screen.
Excellent.
Going terribly wrong. Right, here we go. Okay, let's have a look. Where is that magical chart which I've created for you today? Let's have a look. Here it is. Wow, okay, beautiful. So what do you make of this?
Beautiful.
So on the top, for everyone paying attention, we have the dollar, the dollar index, and on the bottom we have, I'm just checking it because I've just done this very quickly, and then on the bottom we have Bitcoin weekly. I think the US dollar should be on the weekly chart. I'm a bit confused what's going on here, but whatever. So the point is that we're talking about, it's good for, you're just talking about the dollar is good for markets. Well, historically, with Bitcoin, and this is 17th of January 2017, and every time we kind of lose the SMA 15 on the dollar, it comes, we get this move from Bitcoin. So when we get this regression from the dollar, we get this powerful move from this Bitcoin, which of course is a risk asset. And then again, here on 20th of May, around May 2020, we have the break on the dollar of the SMA 15, and look what happens. We have this lovely run up, and then the process repeats. And obviously, when it's kind of ranging, that's pretty good for high risk assets as well. But now we're in a similar position again, as you discussed the other day, with, of course, the SMA has been broken, but we've obviously got the intention of a lot of downwards movement from the dollar. So are we going to see now, as a result, another move up from Bitcoin? So that's the chart I've got. What do you make of it, Igor?
This is the really interesting. I just thinking about everything, and I just thinking about this cycle, because last time when we spoke, I talked about Larry Williams and his prediction that the March will be the month where Bitcoin should find some kind of support. That support can be maybe today, maybe can be these days, and maybe in 2 weeks, I don't know. But after that, Bitcoin should go up. It's some wave analysis that he made. So I believe that can be true. But right now, when I just look this past, I'm a little confused, because based on this, I should expect maybe bigger up move for Bitcoin. So right now, Bitcoin is too slow for me. What do you think about that?
I think that this obviously is just another part of the equation to try and assess, is the bull run going to continue? Which obviously we believe it does. I was talking about this yesterday with Michael, but the question is, of course, things are changing. There are some, what's the fact I've got for you today? I mean, America's average tariff level is now higher than any time since the 1940s, right? Now, that's pretty serious, and that means we don't really have any context to assess how it's going to impact us, and certainly the crypto markets, because unless I'm mistaken, Bitcoin wasn't around in 1940. So
yes.
So I don't know. I mean, the problem is we've obviously Bitcoin's had a very strong move while the dollar's been in this range for a couple of years, and it's difficult to see though if we do get this strong downwards move from the dollar, a strong downtrend, coming maybe all the way down this area. It's difficult to see Bitcoin not benefiting from that. I mean, how low do you think the dollar's going to go? What do you reckon?
I think that the first support that I see is 103, and then the next is 100, and then I think it will be solid, strong support for US dollar then. So it's just some projection.
This range.
Yes, I think it will be strong support in one moment, but I don't know what will happen from this, because I'm afraid, because for me, I expected very strong drop for US dollar, but I didn't expect so huge drop in so short time. This is something that it's not good, because I always want to see that waves, 3 months, for example, US dollar is the king, then 3 months other currency pairs, and that waves I really like. But right now I'm a little bit confused because everything is too fast, and that can be very tricky, especially for a lot of traders that monitor right now this session. There are a lot of scalpers and very short-term traders, and because of that huge volatility, a lot of them can lose money in trading, and this can be very tricky situation for day traders.
Yeah, I mean, it's the uncertainty and it's the unprecedented nature of actions, because inflation, we have a lot of history, we have a lot of precedent, we understand to a degree how it works. And even though we're not obviously patting America on the back for doing a great job of dealing with it, I mean, they deal with it in such a backwards way, ignoring half of the causes of inflation. But the issue is, of course, when we don't have a rule book anymore, because we've got institutional wealth coming to Bitcoin, and then we've obviously just had a pandemic, and then we've got all of these things, then now we've got a trade war brewing. And where do you see the dollar if inflation, because we've obviously got this downwards move, but if inflation starts to spike again, if people don't it seems like a game of chicken at the moment between the United States and Mexico and Canada, and we obviously want all of it to stop. But if inflation does spike and the tariffs remain and a trade war gets out of control, where do you see the dollar? I mean, because we're obviously heading down now, but inflation isn't going to really help, is it?
Yes, it's a really tricky thing, because there are a lot of triggers for bullish and bearish side. For me, the problem, if we see very strong inflation, of course the gold price will start to going up, because hedging of inflation. On the other side, I see the other thing that I see, all these tariffs right now that Trump made. There is one thing, I think that a lot of base metals and precious metals can go higher because of that. And the whole economy, all prices, all inflation, the whole world can go up, and we can go in new recession because of that. And on the other side, all this stuff that Trump is doing, he's doing to have a strong stock market, to have a strong U.S. economy. And what I'm afraid, if we have so big pump in both sides, if we see the Black Monday, Black Thursday on the stock market, we can have a 2008, for example, again, and that can be really, really dangerous. So,
which is essentially, I mean, it's what prompted 2008 is essentially what prompted the creation of Bitcoin.
Yes.
I mean, and you know, and so if everything goes to, I mean, I'm desperately trying to avoid a political conversation, but I think the one thing we do know is that President Trump looks at the economy and the state of the economy, and he uses the stock market as a barometer for success. We know that, right? Yes, that's right. His attention. Now, obviously, the stock market is suffering, and that's going to put pressure on him as well to maybe just hopefully again head off these tariffs before they get out of control. But the question is, of course, what are we trying to get from, you know, Canada, right? And what are we trying to get them to say? And this is where things get crazy, because there's no rhyme or reason for it, right, at all. And this is why we're looking at the market and we're like, well, you know what, I would love to tell you what's going to happen, but it all really depends on what mood certain person in the Oval Office wakes up in, and how much access do the sane people have to him to try to convince him that, you know, fine, you want to focus on the stock market, but this isn't the way to do it. And what the dollar will do as a result, I mean, it's just going to be whipsaw all over the place. It sounds like, it feels like we're going to be talking about the dollar's going to be bearish, it's going to be great for crypto. Then next week something else will happen and it'll be pumping, right?
Yes, yes.
All right, so let's get rid of this before we get into dangerous territory.
Yes,
in the conversation.
No.
Obviously, we're just trying to get the most information, and we're just trying to make sense of what's happening. And that does mean, of course, we're trying to get into the mind of our good friends in the United States. So, what have you got for us today, Igor? Anything interesting to cool us down and give us some hope?
I can little bit show just a moment my British pound dollar. I think let me go a little bit to England.
We're trying to avoid politics, aren't we? You're going to go to my home country and talk about the economy.
Yes, but the way how we discuss about economy and politics, it's polite, it's beautiful. So yes, so there's no problem.
This is what it equals.
Yes, yeah. So right now I'm watching a British pound dollar. Yesterday I was talking about my trading setup, intraday trading setup, and it was very down, very good. It was really good setup yesterday. So what's happened yesterday is I had just to find maybe to put the 15 minutes because this is too big. Just to find where we were yesterday, because I was in session 2 yesterday. Yes, I think I was here. Yes, I was here. Yes, so yesterday I was around level 1.271. I was talking about that we are on the big support there, and I was talking about this level around the 1.2705, and the market just touched that level and started to going up. We finished the session yesterday, and I thought that the price, the final price, will be around 1.2760, and I created one short, one small trade. I made maybe 40 pips, something like that. But market in just a few hours went up to 1.28, and it was a really big move. So we have a more than 90 pips. It's just a couple hours, and it was the end of the trading day yesterday. So it was a really for me, it's too volatile market because I didn't I expect 30-40 pips from British pound dollar per session, for example. And this was a really very strong movement there. And now I want to talk about a little bit about today day. So what is the problem? I repeat very often the strategy for British pound dollar for all traders that listen right now. I will just repeat again. So what I'm doing, I watch the first hour of the trading. Of course, the best time frame to use is GMT, because that algorithms that work on the UK time. So what I do, I find a low and high for first hour of the day. And what I want to see is the price touch the both levels in the next hours. And what we had today is in just 2 or 3 hours, we finished that algorithm. So price touch and the low and the high of the first hour. And after that, we didn't have some strong push down. We just went maybe 20 pips down during the early morning, and then price just started, and whole day we are going to the higher and higher price. So this is the really this is something that it's not very common. Using my strategy based on the last 20 years of testing, only 15% of the time we have this kind of situation in the market. So it is the really steady market. It's pure bullish trend. And of course, I said yesterday, and I will repeat today again, there is one very important price level. It's 1.2850 level. We can see that in the Euro session, we have 1, 2, 3, 4, 5, 6. This is, I think, 2 hours. We have a constantly rejection of that level. Then we just went down 30-40 pips, and after that, again, we broke that level, and now we are going to 1.29. So this is for example, the look of the market for today trading. Of course, I don't have any open position today. Why? Because it's very dangerous to enter into market right now. And what I did on the chart right now, as you can see, I drove Fibonacci retracement. So what I did is I just make assumption. My assumption is that price today will go to the 1.29. And which is just assumption, because this is the very strong level. And if that happens, for example, I would like to see some kind of retrace, because this week, this is really huge push upside. And I just watch to see where is the 50% and where is the 61.8% of the Fibonacci retracement. And as we can see, it's again around this level from the yesterday, 1.271. So what my preferable strategy can be, if market make this kind of retracement and go in this zone between 1.27 and 1.2730, here somewhere I'm ready to make a buy order, to put the stop loss around 1.2680, something like that, and to try to achieve the new high of the British pound dollar. At least the first target is 1.29. So this is some strategy. It's not swing. It's not the pure intraday strategy, but it's something that I'm ready to take in this volatile market, because when this volatile market is so volatile, even the 30 pips or 20 pips is not enough to protect the trade. So this is my setup right now for British pound dollar. And Paul, sorry, because I talk too much about this setup. So please tell me your opinion.
What
if
you
you have.
about? It's just been a few minutes. What? Keep going. We've got.
Yes.
I mean, you've obviously this is a breakout of the previous range, and the 618 seems to be lining up perfectly with what hopefully will maintain support. And I noticed on the 15-minute as well, as we approach this, the 0 fib level, 0% fib level, I noticed on the 15-minute there is some bearish divergence kicking in as well, with that lower high on the RSI and the higher high on the pound, which is kind of highlighting that you're quite right, that upper resistance level on the fibs is probably going to get a rejection, because we can see the markets like the RSI cooling off a little bit. So yeah, I think that's spot on.
Yes,
the equivalent
you're
of
right.
a
There is
breakout by the
a
retest.
bearish divergence.
Yeah. So that's the signal, and it's a very powerful signal to wait and do exactly as you said,
Yes.
and to just buy the retest, which happens to coincide perfectly with one of the most powerful fib levels. So solid setup for sure. Love it.
Yes. I hope that. And for the traders, for example, I'm pure bullish above 1.28. But if the price start to go in this bearish divergence around 1.28, I think that price will accelerate and went down to the 1.2730, 27.1. So this is just based on some my experience, what I expect. So then I will not short. I will just wait for support and make another buy trade if that happens in the near future. So this is my setup.
What would you say if someone wants to short at the 0% fib at the top, seeing as we've got divergence?
Excellent. It can be very excellent. So this is why I put Bollinger Bands. But if you see right now my Bollinger Bands settings, I put free standard deviation. Why I did that? Because it's very, very rare to have this free standard deviation. However, we're very close right now to the free standard deviation. If, for example, right now in next 2 or 3 hours, we touch 1.29 level, we will touch free standard deviation point. And if that happens, it's really, really overbought with bearish divergence. It's a nice level to maybe try to short. Of course, like I said, this is the very strong bull market. Of course, it's not smart to sell on the bull market too often, but with the low risk, why not? It can be really, really good to try that. Or, of course, if some traders see some breakout or something, they can try to sell, of course. But in my experience, I had so many losing trades when I was against the market, against the main trend, and this is why I'm avoiding that. Of course it's just my personal preference, but for all other traders, why not? This level 1.29 is very good to short.
Yeah, I mean, it's good and solid advice to not paddle against the flow of a river. I mean, but there are obviously, but when you see obviously we're oversold on some of the minor trend on the RSI. Certainly we've got divergence. So there is a solid argument, but I think the advice is,
yes,
if you're going to short and you're going to go against the trend, you need to make sure you've got enough bearish signals that other people will see them too, and that might help with just the reset a little bit before more buyers come in. So again, caution certainly is advised. Why do you think, what's going on with the pound? I mean, I should be able to tell you, but I'm not paying attention. So what is going on with the pound? Why is it a bit bullish now?
I think it's purely because of the US dollar, because I just monitor on the various markets. I think that US dollar is the biggest impact, and for euro dollar and for British pound dollar. When I read the news and I see what I'm talking about, I see that Europe and England and the whole European Union talking about the fencing system, They talking about military investing, how European Union will defend themselves, etc., etc., and whole Europe. And there is a lot of talk about that. They're talking about a better expectation for the economy, better. I think that there is a good inflation, and in the British and the European Union, there are a lot of great triggers about the economy. But I need to admit something, Paul, to you, just to say, when I go and take all fundamentals from the December 2024, when the pound was around 1.22 level, for example, and right now, there's no so big fundamental difference. I just thinking about that. There's nothing special fundamentally. So I need to be honest to myself. Sometimes I'm looking for some patterns everywhere, but sometimes I need to be realistic. I think that this is just the period of the time when a US dollar is weaker and other currencies are stronger, and vice versa. So nothing special. And just ask you, are you from England?
Yeah, I'm there. I'm here right now, but I try to ignore my surroundings. I'm joking. We said it would be nice. I'm joking. Okay, so here's the rule: we can diss our home countries and no other. So, no,
do you have any information that from your home ground?
No, I mean, as I said, as a crypto trader, and as you point out, it's the dollar which I pay attention to. However, obviously, I think the point we've been making, certainly since the start of this session, is that, you know, the fundamentals are there and they're important and they'll always be important to trading. But when you're in an environment where there is dramatic shifts in the global world order, then you have to be paying attention to you know, what the news, more economic data is obviously a given, but you need, you know, because it's just what's going to be announced today. You know, is there going to be sanctions announced against the UK in terms of their VAT, because that's something Trump has threatened as well. How will that impact? And there's obviously, there is this coalition of the willing, which the UK, France, and Germany are trying to promote in the light of some challenging political international affairs last weekend with the Ukraine and you know, and it's, people have realized in Europe that I think we're probably at the moment by ourselves, and we have to fill the void which the United States was previously filling. And I think on paper, again, it's so difficult to stay out of politics, but we Europe was committing about 30% to support the issues in Ukraine, which obviously is a significant burden, and the US was doing about 30% as well. So we've got to double really kind of the investment and what we're doing to support if we want to continue along this track, which I think we do. And the impact of that, you know, I'm not sure what that's going to look like. You know, obviously investment in the military and security is important, but how, when we're going to give, you know, when we're going to support Ukraine with more and more, which I think of course we should do, but it's like, how is that going to affect, you know,
yes,
the pound and the euro going forward? Because right now, as you said, the dollar is helping the other currencies, but how long is it until, you know, the pound has a target on its back, you know? And I think the fact that AUD is doing really well is because, you know, it's out the way, the other side of the world, quite happily doing its own thing. So, I mean, I'm trying to make sense of everything. I mean, the impact of Europe trying to pick up the slack from the United States fiscally. How do you, what do you see in the next 6 months from the euro and the pound?
In the next 6 months, I really I don't know what to say. I'm so mixed. So I watch the data, everything is mixed. So I just want to wait to see economics projection. So week by week, nothing special, because I need to see the data, because when they create that, I will see everything. I want to see what will happen with GDP of the all economies in the Europe, with German economy, with UK economy. I want to monitor that. And based on that, like I said, last 2 years, all these parameters that I watch in the market can trick me. For example, inflation, interest rate, everything. But GDP, for me, is something the most complex and some economic data that you cannot trick. When some country has a high or higher and higher GDP, that means that the economy is in better shape. So I believe in GDP. And like this example with Australian dollar, this is pure excellent example. So we double percentage of the GDP increase from 0.3 to 0.6. And we have a bullish trend on the chart and everything aligned, beautiful trade. I feel comfortable, and I will watch what's happened in the production, in industrial production, and all that stuff. With, for example, we talk, for example, on the inflation in Europe. There are a lot of times when I monitor euro or British pound, when we just have rejection of the good inflation report, for example, or a rejection of the bad inflation report, and the price just go in another direction. And based on my analysis for last 2 years, I'm right now 50%, 50%. Like I have a coin and watch what will happen. So I'm very disappointed with that data because they didn't show nothing to me. And because of that, I'm watching right now the most GDP, and I will watching that. And just to tell one thing right now, I just want to tell people that we have, you're completely right. If we watch this bearish divergence of 15-minute chart, we have 1 dot, 2 dots, 3 dots. We have 3 minutes ago, we finished 15-minute cycle, and right now we are down. So there is a high probability that we can go down right now. So maybe this is the good point to sell and put 1.29 as a stop loss, and maybe try to achieve some 1.2730 or 1.271 target. That can be interesting. Of course, this is the high risk reward ratio trade, but like I said, it's not a bad position because it's really a nice bearish divergence on the chart. What do you think, Paul?
I do. I mean, for me, it's all about confluence, and we're approaching significant resistance mathematically as well as in terms of just visually, and then we've got divergence. I mean, and that's what we want. We want to see competing ideas. I'm sorry, excuse, not competing. Ideas all on the same page. It's got. And here's the thing, right? If the divergence doesn't play out and the pound just blasts through that level, then we've got a really significant bullish signal, which is extremely helpful going forward. So either way, you're going to have a good entrance, as you suggested, if we retrace. But we're going to get answers, either way. So is that level going to hold? Is the pound bullish? Which it probably looks like it will be. I mean, here's a question for you, because there's been some news, obviously, that the ruble might get some relief with some potentially sanctions being eased towards Russia. How do you see that impacting the euro and the pound if Russia gets a bit of relief from those sanctions from the West?
I can see that beneficial because I don't want to talk about politics and is it fair or not fair or a lot of things. I just want pure economics to see. We have a really big problem with oil, especially here in Europe. For example, my country, for example, I live in Serbia, and we use Russian oil, and we have a Russian company that manage the oil in my country. And they prepare the sanction. If they put a sanction there, we are without oil. So it's very simple thing. Of course, we will buy somewhere else with a much higher price, and it's not good actually for the industry, for people, for nobody, and for everybody. And because of that, I think that it's a good that first to stop the war again between the Russia and Ukraine. I would like that war stop. I would like that all that sanction disappear for all countries, and I think it would be huge injection for the economy of European Union itself. And if that happens, for example, and we start to build the Ukraine again, Ukraine can be very beautiful country at that moment, because I know, because my country was in the war. If you remember, 26 years ago, we have the similar situation here. And when war passed, after that, you have a huge development of the industry. You know, if you have one egg and now you have 2 eggs, it's 100% increase. And I think it's something happened beautiful for Ukraine people, and this war stop, everything will be great. First, oil industry, then we will have, of course, the Russia will again be here, Ukraine, everything. I think that this will be a huge boost for the European Union economy, and I think that we can see the European euro dollar will increase. I think I actually I don't know what will happen in the forex market, but I think that the world will be a better place for living, for sure. And I think that economy of all countries will be better. So we will see what will happen. What is your opinion about that?
I don't have the insight you do, and which is why I suppose I asked. I mean, it's a very delicate topic, and I think the problem is it's very binary in terms of how it's discussed. And when economists and traders, crypto, forex, whatever, S&P, are trying to make sense of the market, they have questions about what will happen if this happens. And
yes,
and obviously, you know, peace. We want peace. That's all we want, right? That's it. I mean, but it's we being able to move that to one side in order to trade, in order to be successful, especially with these markets. You've got to kind of understand what is happening and the impact. And as you said, it's so difficult to quantify right now. But we have to try and get the pencil out and try and plan. And just make adjustments based on what we see, because that's the end goal, really. We just want, you know, because we still haven't fully got our foot out of the pandemic. I mean, would you agree with that sentiment?
Yes, of course. We are right now in the stage. So when I think about all of that, I'm thinking about 2 things. One thing, let me forget the war. Let me forget Ukraine and Russia and all these things. I see that something happened good in Europe and England, for example, and everything. When let me talk about GDP. GDP increase. For example, in February 13, for UK, we have 0.1% GDP. Projection one was, if I remember, 1.1%. And we had percent was 0.1%, and we had, if I remember, 0.4%. I'm not sure, but I think that that was a report. We had a 4 times bigger GDP than expected for British pound, and from that moment, I see the strong bullish trend from British pound dollar fundamentally. So, for example, we can just remove all these things that exist in the market and just watch GDP for every single country, and we can conclude that this period, this first quarter, should be better for euro, for British pound, than for dollar. And this is my opinion. And now the question that you ask about pandemic and everything, I think a lot about this problems, catastrophic things that happens in the world, and how that impact the Forex market. And I will give just one example about earthquakes. I made, for some company, I made some strategical analysis how Forex market reacts when we have some sudden things like a pandemic or earthquakes or something like that. And I watch all earthquakes that we have. And I ask myself, if we have earthquake, for example, right now in Japan, what will be with the Japanese yen? And this was my question. And it was really, really crazy thing. The first 12 hours, price just going up, down, up, down, up, down. There's no clue what will happen there. Then 1 to 2 days, we have yen or any country that has an earthquake, price is going to be bullish. It's a bullish, and then we cannot know. This is some pattern that I figure out. And this is the same thing when talk about all these things that we have in the market. It's so hard to predict. So hard to predict what will happen, what is happen, all these scenarios, all these things. It's really, really hard to make any kind mathematical prediction or something like that. So do you have some kind of the way how you can predict market based of these situations?
Well, I think I'm just going to share a chart because on this, if that's okay.
Excellent.
Just for a second, I looked at this yesterday briefly, and it kind of, obviously this is a bit, people paying attention might think this is a bit of a strange conversation, but obviously when you're trading and any market, you've got to kind of understand the impact on world events, and that's all we're trying to quantify, as obviously there's a lot of very interesting things happening at the moment. I'm just trying to find the right chart. Here it is. So as predict for sure, but I think this is the cycle top of the last bull run for Bitcoin. And
okay,
historically, every time the bull run has peaked, we've kind of hit this top Fibonacci pairing, and it's coincided with the stock RSI. This is the weekly being oversold, and you see it's a historical pattern. This is 2013, this is 17, but this is the pandemic bull run, right? And you'll notice it didn't.
Can you just share the chart, please?
Sorry, can you not see it?
No, it's still me.
Really? Okay. I think our wonderful host probably needs to do it for us. Maybe if you stop your share.
Okay, I will stop my sharing.
Let's try that. Technical. Let me try mine again. It's just, yeah. So please, thank you for telling me I was talking and you couldn't see the chart, because that's extremely unhelpful. Right. How about now?
We'll see. Yes, I see.
Okay. Right, so sorry about that, everybody. So we looked at this yesterday briefly, and a quick summation. These are the previous bull run cycle tops. This is 2013, this is 2017, and this is the previous bull cycle. And you'll notice that the previous tops, we touched this upper fib line here, and it coincided with the stock RSI on the weekly being oversold. But the pandemic resulted in quite a muted peak. And it was pretty much considered that if it wasn't for the economic headwinds and all the stuff which was happening, Bitcoin would have definitely hit 6 figures. I said probably definitely there. That's a bit contradictory. Probably would have hit 6 figures, maybe up here. And obviously that did impact the bull run. It was slightly more muted. Now here we are again with a different set of problems, more directly, to do with the economies. And we've got plenty of headroom, of course, on the stock. So, we're definitely probably, again, I've done it again. We're probably coming up here. But are we going to have another muted bull run this time, this year, because of the challenges with, sanctions and more economic headwinds and inflation, which may start to head in the wrong direction? So I'll just, that's kind of, this is the conversation. This is why we're having the conversation, because we want to know, where is the next bull run going? Where is it going to stop? And in any market, you've got to try and quantify what is happening in the world to say to yourself, well, you know what? it's a pandemic. My original target of taking, taking Bitcoin at 106,000, I'm not going to do that anymore, because I understand that the challenges which Bitcoin's going to face getting to that level with these economic headwinds. So therefore, I'm going to be more conservative where I take profits or start thinking to exit the market. And this is essentially why we're having this conversation, because we're trying to make sense of all these issues for people viewing. Because like with anything, the fundamentals are so important and you can never let go of them, but they are irrelevant if something happens. As you said, like an earthquake in Japan, they're irrelevant. They will impact the market. So have you got anything else for us today, or shall I just go straight in with Bitcoin? You tell me.
Please, I just want to ask you something about Bitcoin, because when I met you, I started to think a little about Bitcoin more than in the past. And I started to think, are there any kind of correlation between the NASDAQ and indices and Bitcoin price that you can use in trading?
There was a chart I was thinking of doing today, which kind of is exactly that question. But yes, there is. There is a correlation, but it depends on Bitcoin's mood. So let me explain that. I'm just going to get a Bitcoin chart up, so while we're talking, people can kind of see the state of things before we get into it. So this is just a daily chart, and we were previously talking about this bearish retest, and we're in this range still. We're above the 200 MA, so we're all good. So soak that up, and we'll talk about that in a second. But so Bitcoin historically, it tends to peg itself to whatever is trendy. So it will go 4 months and it'll be very reactive to what's going on in the S&P, as an example, right? And then it will be very reactive to what's going on with the dollar, more than you would expect. And it attaches itself based on whatever's going on in the market. Because say, for example, there's all traders and investors are looking for a specific action or recovery from, say, a certain portion of the economy, whether it's inflation, whether it's how well the S&P is doing, or the NASDAQ or whatever, right? And when the spotlight is on inflation, then of course Bitcoin is very reactive to news coming out of the Fed and all that kind of stuff, which has been kind of what it has been recently. Then it was all about, ETF news and institutions and SEC lawsuits and how that was playing out. So Coinbase would get a notice from the SEC, and then the market would tank, and then you'd get some news saying that it's okay for Coinbase, everything's fine, then the market will react. And then other times it goes up with the stock market and it goes down. So it's not correlated specifically at the moment, but it has its fads, it has its phases where many traders will be bringing up the S&P or looking at specific, like Nvidia as an example, right? Not a crypto stock, but in terms of the AI tokens, things like Render and all kinds of stuff, things which of course are just part of the crypto market and not what we offer here at the moment. They are always very active to what Nvidia is doing, as an example, and those correlations change. So the answer to the question is, it depends on Bitcoin's mood, but when you identify there is a correlation, then we should be taking it into account. But perhaps before next week, I'm going to look into this a bit more so I can give you a more educated answer. I mean, does that give you some clue, answer to your question?
Yes, because if I decide to start to trade Bitcoin, I'm always thinking how to approach there, because it's not like in Forex that I can monitor economics news or something like that. I can use pure technical things that I already know, but I always think, are there something that I can use fundamentally when I trade crypto like a Bitcoin?
Well, your knowledge of the dollar, of course, is going to be very helpful, as per the discussion we had at the start. And the correlation will right now, it's all about the dollar, it's all about inflation, it's all about the news out of the White House and all that kind of stuff. So it's crazy town right now, and everything's just all over the place. But yes, there will be, and there are frequently, but it changes. That's the strange thing about the crypto market. It just, where we are now, for compared to where we were 4 or 5 years ago, it's a completely different proposition with mainstream institutions coming in. And I mean, everyone's talking about it. I mean, it was, remember back in 2017, before Bitcoin hit 20K, you would be bonkers to have President Obama talk about, Bitcoin or creating a strategic reserve. So it's very different times. And of course, as a result of that, there are new kind of factors which stimulate or minimize the market or add pressure in different places. I mean, and so I think there's a point I was trying to make, because there's a lot of stuff going on. It's like, so today there's an announcement by the White House that they've invited Michael Saylor, which of course is an American entrepreneur and co-founder of a MicroStrategy in Washington, DC, is a business intelligence firm. They've asked him to join the crypto summit on Friday in Washington. Now, how will traders view that information? For me personally, I don't know too much, but at least I feel that there's going to be somebody who understands the market in the room, and that might be a bullish signal, right? So
yes,
this is the conversation, and it's very difficult. So I'd like to be able to say, yeah, just pay attention to the NASDAQ right now, but it's like I'm not even sure what to say to pay attention to outside of the dollar, because it's just everything. Because here's the thing: if there is a strategic reserve created, as an example, in the United States, and Bitcoin is a global commodity, everyone will then be watching. Is there going to be? It'll be like Binance adding a new token. It'll be like it will go to the moon, because the strategic reserve in the United States will announce that, oh, we're going to add Dogecoin now, and then that will go. So there's so many factors to take in, and it's just kind of follow the news, wait and see. Really, I mean, do you kind of agree with that assessment, or am I just being a little bit flailing in the wind?
No, beautiful, because all these things, small things that people monitor. I know that a lot of people that trade cryptos and Bitcoin and everything, they trade and use special news sentiment indicators for that. And there are a lot of things I see that connect with the make.com, and they collect the news, and from the news they try to predict the market and various crazy things for me sometimes. But I understand that, because all this stuff, all that news, all that sentiment, they really push the market, and it's a really very important. So I appreciate your advice and all things that you're talking about, Bitcoin.
Yeah, and this is why I've got this fear and greed index here, to just get a sentiment. It's not something I particularly trade off, but it's helpful just to see where things are. I mean, again, it's like today, Mexican billionaire Ricardo Salinas, with a net worth of 5.8 billion, said he's allocated 70% of his portfolio to Bitcoin. I mean, that's insane, right?
Insane. Really, it's insane.
I love Bitcoin. I'm a crypto trader. I promote it, but I'm like 70%. I mean, so this is the conversation, and it's been so helpful to have your insight, because I just don't have it in those markets. But let's look at Bitcoin now, and let's just get some trades for people to have a look at. With nothing new really. This is a slightly cleaner chart. We've got resistance here, and in fact, I've got a better chart than this. Let's just move it backwards one. So here we go. Yeah, so we've got support down here. You're looking to get into Bitcoin. We've been discussing the last few days. This is the support area. Okay, so Igor, when I say support area, can you kind of explain what I mean by that? Because if I say to someone you want to buy in here, they'll be like, well, do I buy in at 73 or 69? I mean, can you explain the concept of an area?
Of course, I believe in area. For example, I just give example. My company where I work, we use expression ML, for example, pivot area. So I don't believe even the pivot price. I believe always in area, because this is something that we cannot predict what will happen. Sometimes we have a wicks. That wicks can be really, going to the whole support. Sometimes the half of that support area. Support area is the best expression, I think, much better than only talking about price area. The same thing I just talked about British pound dollar, when I say that the support area is between 1.27 to 1.2730. So it's the same thing, support area, because I don't know the right price point level. So yeah, and it's very clear on your image. It's very clear to see where is the support area. Yes.
Yeah, because you can see it here, right? This is the resistance area, and the initial bearish retest was right up to this level, but now we've had it at the lower level, defining the range essentially. And again, so but also when you're trading and you're entering or exiting in areas, I mean, it promotes good practice, because
Yes.
if I'm waiting to see if this 200 MA on the 1 day breaks, and it is a very significant support line. So if you're looking for bearish scenarios, which we're kind of in at the moment, this is a break of this, a candle body close on the daily below this 200 MA. Definitely this support area is going to be in play. And when you're trying to attack it, you want to, you don't want to miss a move, but this is your first position, 25% or 33%. This is your second position, right? And then you've got something to manage. And if we get a reversal, then you can come in again here and you can just swoop it up, right? And that's the game. And so when you're charting, there are obviously instances where you have a very clear definable support line, which is just like a rock. It's just at a specific price, and that's okay. But most of the time, you're going to have these ranges to try and enter in. Like they've got this mid-range I've put on here. It's like a huge kind of candle which has created this gap. And this is kind of, we don't want a candle body close in here. So this is the range. If you're thinking of doing some short-term trades, this is the range to do it in at this point, right? This is where we are at the moment, because we're still above this moving average.
Yes.
But if the moving average comes up and it is going to narrow this range, it's kind of going to create potentially an ascending triangle of sorts, and we could see a breakout based on that. But right now, we've got this range above the 200 MA and below this resistance, and that's something you can trade. Right now, if we zoom in, let's just see what's happening to the price action. Right, so ignore that moving average for a minute. So yeah, you can see we're in a downtrend for sure, but we've got quite good support, and there's the range here. So this is a nice area to play around with if you're doing kind of trade. Just make sure, I think, because of the hesitancy in the market, give yourself confirmation, right, for a short trade. Yes. Extra confirmation. So this would be an example. We've got this macro uptrend, but it's broken, and then an entrance up here would be confluence with this top trend line, and that will just give you a bit of something to trade off. And so don't be just like sell here, buy here. Give yourself additional factors to ensure that the market's going to go in the direction you want, because all it takes at the moment is one tweet or one news thing, and it's going in either direction. So extra confirmation for people trading this range at the moment for sure, but it's a good place to start, just to make a little bit of quick money, because you think about this range up here. I mean, it's just easy money, right? As long as you put in some some proper TA. And likewise, when we were down here, I remember this period all the way down here. I can't remember. This area again. I was these are areas. They're great to trade once you've had a run up, because you've got two definable areas which you can. So Bitcoin is really good when it's doing that, and it's a lot more manageable when you're in a range. So even though we do have a slightly bearish posture, as we've talked about, this is a perfectly normal pullback. It's perfectly healthy. There's no real problems. It's like, here you go. This is we could come all the way back down to 71, 73, perfectly normal, and then away we go. There's no problem. So when we're talking bearish, we're just talking short term, medium term, nothing really to worry about. But if this moving average is lost, then we're definitely going to be ranging probably around here, short of a liquidity grab. So that's Bitcoin. Not much has changed. We've got a nice range to trade in, and we did say I'm going to look at. We're going to put Ethereum to one side for today, and we're going to look at Bitcoin Cash and Litecoin. So this is Bitcoin Cash 1 day. I was talking today, just talking about how all the top 10, top 100 cryptos, they tend to just move together, but they're actually quite two distinctive charts here with two different postures. So this is Bitcoin Cash. This is where we are. This was the previous bull run. So this is the 221 bull run high. You can see we're nowhere near it. And this is a kind of definable breakout range for these strong moves, which hasn't happened yet. As we talked about, Bitcoin's put in all-time highs, but most of the other cryptos have not. So long-term support here. We're back in this range. We're underneath this moving average. So this is the range to trade. So if you're thinking about long-term buys for here, obviously the support line, but I don't think we're going to get that, because we haven't been down here since you know, 2022, mid 2023. So
Yes.
if we zoom in to see for long-term holders, if you're looking to get into it, there's an obvious support line here, right? And we've been above this since March 2024, right? So it's strong support, okay? So you're looking to get in for a long-term trade. This is the line to look at for now, all right? But especially because if you get in here and we do come down, as we've been discussing all week, if we get a, I keep losing my tool. Where is it? It's the most annoying tool on TradingView. It's the draw tool. There it is. So if it comes, if you do enter here, which is a great position for a long trade, because look, we've got all this ahead. It's don't stress if we come back down here, because we're going to get the retest. You can get out and reposition at a lower level if you want. That's the whole point of not buying here, but buying down here, right? Because we've got resistance, we've got this moving average. So this would be your long-term hold entry. It'd be very manageable. So if you're looking to get into Bitcoin Cash, that's the level. But also if you're looking for some trades now, let's zoom in even further. Just let's go straight to the 30-minute chart. So again, that's why I hate that tool. So we are just peaking above resistance, right? So the potential breakout is there is a bit of volume attention here, but it's not particularly strong because again, we go back to that conversation about ranges, right? And we've got this resistance range. So some traders will be looking at this and thinking, you know what, we've got this breakout. This is great. I'm going to buy in on the retest. But the thing is, we're still in resistance. This is still resistance, even though we're above kind of the bottom range. What we're really looking for, you want to look for a simple breakout by the retest trade. It's going to have to come out more, and it's going to have to be kind of here, right? So that's what you're looking for if you're trying to get in for like a short-term, medium-term, long trade, because we've still got another range to go before we get up here. And if you were thinking of a long trade from that point for like just maybe a few week hold, then I would definitely recommend taking profits around here, which is, let's see what we got. So that's just, you know, maybe a 20%er, because we've got showing signs of a breakout. We've come up here. This is where we're going to stop. But until we get above this level, because we haven't been it for quite a while, I wouldn't say, you know, buy the retest and wait to hold, because you're probably just going to range anyway. So the trade is wait for a breakout, come in, scale in this, what will hopefully turn to a support range, and then take profits here. That's the move for a short term. Now, if we don't have that, and if this kind of comes back under, and what we'll essentially be looking for, and if you see anything I've missed, I got to jump in, of course. But if we get this now, then that's your short trade. You enter your short trade here, and you take profits down here. Two kind of short-term trades, really straightforward. Obviously, as we've said, don't just do it based on these support and resistance levels and zones. You want to have additional confirmation. What would that look like for a short trade if you're into kind of all the fear and uncertainty? What would that look like? Well, we want to see a pattern of some kind, which we don't have. You can obviously draw a really basic trend line, and then when that's one bullish signal if we get a break below, sure, but I need more. I want more. So let's put some order blocks on. Again, just trying to supercharge, right? So, you know, it's there's a lot of buyers looking to come in, right, on the 30-minute. Let's see what we're looking at on the 4-hour, because you don't, so it would be quite a valid short trade, but you've got this moving average sweeping in. So do your TA, do some work on it, and really consider where you're going to take profits. And if you've got this, if you spot this moving average by doing your multi-time frame analysis, which is switching between like the 15, the 30, the 1 hour, the daily, the 4 hour, to see where the resistance and support is, just literally get a piece of paper and go, right, so we've got these resistance ahead, we've got these support lines underneath. What's the trade going to be? And if you're worried about this moving average here coming in, then your short trade is just going to be to that level. I mean, why risk it, right? Because you're going to get a bounce on there. So this is the negotiation you need to take. But another sort of thing you might be looking for in terms of bearish confirmation for a short trade, you know, you maybe want to see a double top, you know, something like that, right? And then you've got the double top, you've got the breakdown of a basic diagonal trend line, you've got a confirmation of a reversal pattern, plus a bearish retest. And now we've kind of got we've got the conversation going about potentially the reasoning behind that trade. So that's how it should be constructed. But those are kind of the general idea is trade the range you're in, right? So until this breaks out above, this is the range you want to trade. And because we're at the top end of it, it's going to be a short trade. But when we're at the bottom end of it, you're looking for a long. And this is the approach you should take, which is why we said this is be aware of the ranges, because if you just buy long here thinking that we've had this breakout, I think it's not going to happen. So you need to see it come up a bit more with a bit of strength before you know, and really finds a floor before you do any long trades here. But as we said, lots of opportunities when we have these assets ranging, but also because a lot of the altcoins in crypto are so oversold, they're great opportunities for long-term trades, which maybe in a few months' time we won't have. So you can see what other people are thinking. So, you know, this is a good place to come in for a long position. Let's just zoom out to see kind of what we're going to get from that. So yeah, so coming from this level, if you want to buy in for a hodl, maybe try and catch a wick, be a bit conservative, 243 maybe. You know, that's 500% from here, right? Yes. That's nothing to shake a stick at. So yeah, that's Bitcoin Cash. Good place for long-term entry. I don't think it's going to come down here because this is a very bearish scenario. But you know, in all of this trading in this range is pretty good. It's pretty consistent in these tiny little ranges, and you can really build up a little bit of money, especially if you want to compound your profits. So, but just be wary. I mean, this moving average is great, right? And this gives us a bit more confirmation for a potential short trade, because even though you've got the 4-hour moving average sweeping down on the 4-hour chart, right, acting as support, as you can see here on the daily chart, the 200 MA is solid resistance. It's like a wall. So you know, if it doesn't break above it, this is the trade. This is the short trade here, coming from here, maybe back to here, or one of these levels, probably actually this here. So that's potentially a trade. And for a little bit of short trade, as a solid spot, 20%, just to this level, which is safe. And if you put a bit of leverage on it, well, you know, it could be 100%. So that's how you do it for Bitcoin Cash. Any comments on that? Any insights you can offer from your perspective, Igo?
Yes, I will just to talk a little bit about these areas. But before that, I just want to ask if any trader watch this live session. If you have any question, any suggestion, please write into your chat, so maybe we can discuss about that. And while we talk about that, I will just present again my screen.
Yeah, cool. Let's do that.
Like this.
Yeah, we like
okay,
questions.
I just want.
Questions coming.
We have any question just to check? No yet. What I want to just to remove all these indicators. Yes. What I want to show is why these areas are very important in trading, especially when we trade major Forex pairs. So I will put one just to choose the horizontal line. Here I will put a horizontal line just to talk about this target. So there is a level, and the price level that we have here, it was the yesterday trading, but I just want to show you the previous example, just to find a little bit. Oh, the problem with I need to switch to the premium because this is not the solution. Okay, I can show, and here there's no problem. What I want to tell you is that, for example, yesterday the price target was 1.276, and I talk about that level all the time. And what's happened very often in the market, especially before a new session. So this happened a couple hours before a US opening session, and price reached 5-6 pips before the target and then went to the again to the support. And a lot of traders can just lose a trade. When I trade this intraday trading strategies, usually one strategy lasts 3-4 hours. For example, one session, one trade, another session, another trade. This is the perfect case that can happen. If I have that kind of the case, then I'm monitoring my trade when it's very near to the target. And usually I watch these areas. So area can be 10, 15 pips around that target. And I'm just monitoring that area, what's happened there. And sometimes I'm ready to earlier close my trade, especially when I'm in the pre-market session. So a couple hours before a UK market, a couple hours before the US market, this is the very tricky period of time. And usually then we don't reach the target that we want, and I need to be ready to close earlier trade. Of course, after when we have, for example, US Open or European Open, it's a different story. Why? Because if I have a bullish trend, and that bullish trend started after the first half hour of the opening range, it should continue next few hours. It will not never, it will usually in 80-90% of the time will not just ended after the opening range, because opening range is because we need to develop new trend, couple hours, then we go to the pre-market, then we develop a new opening range, then we develop a new session, etc., etc., and that's how that markets usually works. So these areas are very important to monitor, especially for targets. For stop loss, there's no problem. I have a stop loss, and I always try to calculate the right place for stop loss, and I don't like to move my stop loss or etc. But for target, sometimes I'm ready a little bit, couple of minutes earlier to close my trade. And there is one trick that I just want to show traders related to the targets, and it's a trick that you can go to the futures market. I know that you don't trade the futures. You trade, for example, British pound dollar, but you go to the futures market. The futures market is almost the same price, or I think 98% the same prices. There's no difference there. But there is one very important trick, because when you trade the CFD and when you trade a Forex market, we don't know the real volume. Because in this market, we don't know how much euros exchange for US dollars. It's so complicated to calculate that volumes. We know the real volumes when you trade equities, for example, but when we trade CFDs, we don't know that. But futures market is a centralized marketplace, and we can get that volumes especially for that market. And it's good if you have a volume profile. Here, for example, I think that we have even, I have in the premium account. In this account, I think we don't have, but we have a fixed and range volume profile. Let me just check this. Do we have? Yes, we have something. Okay. So I just put a volume profile on futures for British pound dollar. And what you're looking for is this volume profile that we are right now. This is 1.286. What it means is this is the very important price level. And as you can see, based on the volume, we know that we are on the very important price level. Sometimes you will not know that, and it's good to draw the profile to see which level is very, very important. Why is that important? Because price oscillates on various price levels, but this price level is something that price oscillates very, very in a high frequency. like I said, in that way. So for example, imagine that you have 60 minutes of 1 hour. Imagine that 25 or of, you know, let's give another example, ticks. Let me measure ticks. Let me imagine that you have a 60 ticks, and from that 60 ticks, you can, for example, 20 ticks can be 1.2860. That means that one price level can be so important price level that price oscillate too often there, and it's very good for target because you know you can reach it. And when you look this market like now, just this example that you have on the screen, please watch 1.2060. You can see how in last 2 hours how many price touch this level. It's insane, a lot of times. And sometimes we can have this example. I'm trading, for example, and I realize that I want to go out of my trade. And I just want to go out, but I don't want to close right now. What I'm doing usually, if it's in that my favor, I wait that price go to this important price level on the volume profile, and I close my trade because I know that this target will be very occasionally we will have this price level, and I know it will repeat a lot of times, and I can use it in my trading strategy. So volume profiles are very good, and you can use it on futures on the trading view. Even you don't use it on the real trading because you trade CFDs, you can use it on the trading view just to calculate the real price level, which is the best for some target that is not low or high. So if you need a target that is not low or high, that price oscillate very often, this is the great way to find that. And the next thing that I want to just to share, I hope that you don't have a problem with that. I just want to
I have a problem. Stop it. It's all good. He's great. This is great information.
I just want to yes, this is something that I think that there was a guy who was the winner of the world the competition of Forex. This is some guys from Germany, and they use these volume profiles as a lot. And they use their strategies and volume profiles, and this was their secret sauce, because what they do, they go to the futures, they see that volume levels, and then use that volume levels when they compete on CFDs competitions. So that can be really good way, And just to show the Bollinger Bands for euro dollar, what I want to show here is again, I want to put standard deviation free here. And right now, first, if I go to the daily chart, this is something that I want to show you. Look this. So we touch Bollinger Band free standard deviation upper band. And if you right now decide to find the last time when we have this, for example, in last 1 year, I think that we didn't have any that kind of example. Maybe here we touched low in the April 2024, something like that. But in this way, with so huge bullish trend, and what I want to tell, usually when we have this on any kind of time frame, it's normal that price after that go to the mean reversion. This is the middle line, it's a 20 moving average, and after that to continue to upside. So for traders, that if you decide for any asset that you trade to use this strategy, remember this, because this is something that repeats itself very often. So watch this mean reversion price. I just wanted to share with you this because right now I like to be bullish on euro dollar, but we are so overbought on the daily level, and I think we are on the hourly level too overbought. Yes, we are almost 80 relative strength index. This is really insane for euro dollar especially. So I would just monitor, maybe rather to short it than to buy. Yes.
No, absolutely, it's a really good tip. Could you go back to the chart you were just on just before this one? Because I think you made a really
about volume profiles.
No, just the one just before
you. About
no, I mean just the time frame on this chart you were just looking at, just the last display.
This chart. Okay. This one.
So, yeah. So that's really good tip. So when you've got a strong move, right, where are you looking to enter, and where will the market? You're looking to enter the median line is what you've said, because that's the most obvious support line. And you notice on the RSI that you had that dip between the RSI's median line, just like you did in the price action. So what you would expect for confirmation that that median line on the Bollinger Bands is a good place to enter is because it looks like we're going to get a bullish retest on that median line on the RSI as well, and it'll probably line up. So that's a really solid advice, and I think, and it'll be interesting to see how that plays out over the next few days. So that is a fantastic, and I think the conversation about the fixed range volume profile is we definitely need to probably get into it more. I mean, because it's about. Please.
Yes, I just want to tell you're completely right. Very often, two things align. For example, I would like to see the price here move to the medium line on the 20 moving average here, and in the same time to touch this trend line. Several times this happened in my training career, and it's a really good feeling when everything aligns, and 20 moving average and this trend line, and you just touch that support, and then after that again price is going upside. This would be really, really good if that happens. So it's really good. Yes.
Yeah. So I mean, the fixed range volume profile, obviously the point of control, which was the line you were. I mean, let me just see if let me put it on one of my charts. I think this is a good point to close on. Is that okay? Do you mind?
Yes. Of course, so yes, please. I will stop sharing. Okay.
It's such a great thing you've brought up, and it's something which we want to. Can you see this? Okay, we're back on Bitcoin Cash. Can you see that? Okay.
Yes, I'm seeing that.
So yeah, as a crypto trader, of course, we do get more of an insight into volume and liquidity, but ultimately, when you're trading, when you're buying and selling, you're trying to do it where there's the most liquidity. And the reason why we get quite strong reversals from these low volume nodes at the extreme points is because, of course, there's nothing happening there. And the point of control, this middle line, which you demonstrated, acts as gravity to the price action. You can see it here. So it's a great place to buy into. As you can see, when we got a breakout, we had, there's these retests here which allow us to kind of buy support. And obviously don't just do it based on the point of control, but if you notice, the point of control aligns perfectly with this trend line. So as you said, confluence, but you can get, when you're trying to range trade, you can get confidence knowing that if you've got a low volume node overhead and you've got a low volume node behind, that's just another thing which is going to keep the price action here until it breaks above. And the liquidity is so I will frequently, as a crypto trader, be looking into the futures market and open interest indicators to get a sense of what's going on under the hood, which gives you an insight into institutional money. So what you're saying about trying to figure out where is the volume, where's the liquidity, in whatever market you're trading, whatever instrument you're trading, it will give you an edge for sure. I mean, me just knowing, right, that this is the range to be in by looking at the volume profile in addition to the trend lines is helpful. Knowing that taking profits here is probably a good idea. You can see other traders have the same idea, right? Is a good idea because the price action will gravitate to it and so forth. So it's just another thing to take into consideration. And it's the importance of, when you're trading, you are when you're trying to enter a position, you're entering it with as many people as possible, right? Or as many people who are trying to move the market in the direction you are. And tools like this, which move beyond basic volume, I mean, I don't think the open interest indicator is going to work on here, because it's I don't think Coinbase, there's no data. But if you have open interest indicator on the bottom, which shows you essentially all the what's going on with the futures market and so forth, you see divergences between open interest and the price action. That's something you can use. That's something you can trade off, right? And this is the added kind of insight which we're trying to convey to people, that the whole conversation at the start of this was, we weren't really talking about strategy. We were talking about how to interpret what is happening and how it impacts our trades, and the conversation about volume and liquidity, and getting an insight when you can't, when on the face of it it's quite difficult to tell, like in Forex. This is the game. This is what gives you the edge, because everybody in this market, whatever you're in, is trying to take your money. And if you approach it like, well, this is a support level, I'm going to buy in and then we'll see what happens, it's not going to work out. It just won't, because you have to understand what other people better than you are doing, their mindset, and volume, liquidity, fixed range, all that kind of stuff can give you that insight. So it should be incorporated into your trading strategy. And I think, as you said, Igor, like the trades where you have confluence, the combination of like a support line on the RSI, which marries up with, the support line on the price chart, that's gold. And that's what we should be looking for. And that always goes back to the first session we had a few days ago, which was discussing patience. So it'll be interesting to see what happens. Do you want to have the last word?
Yes. And Paul, just to tell you that next time when we work together, we will talk a little bit maybe about code report, because we didn't talk about code report in the last 2 sessions. And for Forex, for US dollar, for everything, it's really valuable information. So when we add code report, volume profiles, relative strength index, fundamentals, all this stuff, put it all together, all that triggers, it's really good feeling for trading. Yes.
And that's all we're trying to do. We're trying to get people to have good feelings. And when you've managed to pay off your mortgage, or whether you've managed to buy a holiday, or you've got a new windscreen for your Ferrari, it's all good vibes. And this is what we're trying to achieve. And I think this was an important conversation. And I haven't got to Litecoin today, but I'll have a look at that tomorrow. But I look forward to our next session, Igor. It's been great. It's so insightful speaking to you. So thank you.
Yes, it was a pleasure to talk with you, and I learned a lot from you. Thank you a lot, Paul.
All right, well, I look forward to our next session. For now, though, I think we'll sign off and wish goodbye to everybody for today.
Okay. Bye-bye.
Take care.
Okay.
Hey, Howard, can you hear me okay?
I certainly can. How are you?
I'm awesome. What about yourself?
I cannot complain.
That's awesome. Nice to meet you. I don't think we did a session before.
No, this is actually my second session. I did one yesterday with Sam, and so first one with your good self today.
Oh, perfect, perfect. Well, nice to formally meet you. I'm Mike. Everyone calls me FX Dinero. That's my trader name.
God, I won't tell you what people call me.
Oh, no worries. Nice. All right. All right. Just let me know when we're live, I guess. You still with me here, Howard?
Yeah, all good.
Okay. Well, yeah, just let me know when we're all live. Oh, okay, perfect. Cool. So looks like the host today is having a little technical difficulties today, but no worries. I'll go ahead and grab the reins for him, and we'll kind of go ahead and kick the session off here. So once again, guys, my name's Mike, aka FX Dinero. That's my trader name, and everyone knows me by. A little bit about me, then I'll pass it over to you, Howard. You can kind of tell a little bit about yourself as well, and then we'll jump into it. But yeah, a little bit about me. I was one of those traders who got in to this early, the racket early, about 12 years ago. I was at a Starbucks, and one of my friends had another friend named Caesar, and this guy drove a Lamborghini. And I'm like, man, what does Caesar do? And come to find out, Caesar trades stocks, right? And I literally seen Caesar make $2,375 right in my face in the Starbucks in like 2 hours. And right then, I knew there was something to it. The very next day, I was at Caesar in my friend's house watching them trade, right? And that was about 12 years ago, and I've been hooked ever since. Fast forward tons of years. Obviously, it took me a long time to figure this out. Figure out what was going on. I say I was often trying and failing for literally, guys, about 7 or 8 years. So I actually just now got profitable in the past 3 years. I am currently a full-time trader. I'm a trading coach at WB Trading Education. So I help out a lot of their traders with psychology and just strategies in general. I also obviously work with Hola Prime. So help out these traders here as well, help out you guys, try to give my expertise and insight. And then I've also obviously have my own fund as well. Trading, have about 1.2 million in funded capital. So help manage money there as well. And yeah, I'm just here to add value and see what I can lend my expertise in what areas, build connections. And yeah, so that's a little bit about me. I'll hand it over to you, Howard.
Okay. Well, I guess I'm a bit of an old dog here. I've been in the trading game one way or the other for over 30 years. Obviously I don't look as old as I really am, but hey, I guess trading keeps you young. So yeah, I kind of I got my chartered market technician CMT back in 2004, and career-wise, I've been either trading for the latter part of the last 10, 15 years, more kind of for a living, but also doing analysis for third-party research providers. Also, I live in Switzerland. I came across in 2009 to head up the research team of a Swiss bank stroke broker. So I've done quite a lot of analysis. I got into technical analysis, I would say, kind of in the early 1990s. That's really I got the bug because I was working for a Japanese warrant trading house, and they were losing money hand over fist when the bull market turned to a bear market. So I figured I need to figure out how this stuff works. So I kind of picked up a few books and learned, taught myself candlesticks and all the rest of it. And I went through the whole process of Elliott waves and MACDs and indicators and you name it. In the late 90s, I got into systematic trading, rule-based trading, because I found that I wanted something I could really hang my hat on. The idea that you can. There are so many opportunities to make and lose money, I think, in the markets. Yes. So filtering it and kind of finding your niche and finding what works for you is key. So yeah, I got into systematic. My first proprietary trading job was for a family office in London back in 2006. And then, as I say, I came to Switzerland in 2009 to head up a research team of a Swiss bank stroke brokerage. I went solo in 2012. A lot of clients wanted me to trade for them. And I couldn't do that while I was working for the bank stroke brokerage. So I went independent and got my asset management license over here. And since then, I've been either trading for myself or for clients. But also, I'd say since COVID, I spent quite a lot of time getting into trading education. That's really something that kind of took off during that period. Because obviously, a lot of people were finding themselves kind of isolated, and it can be a very solitary profession at times. So, helping people, do this is one of my main drivers, I would say. So it's not an easy game, but you can win it with the right education and the right mindset and all the rest of it. So that's kind of that's me in a nutshell, I would say.
Nice. Okay. I guess before we get into the charts, just curious about a few things. Like, what do you currently trade? Like currencies?
Yeah, currencies is the main thing. From time to time, I'll do the odd S&P and NASDAQ and stuff like that. But FX is really my main thing. I've been doing that really, solidly for a long time. So nice. The sessions that I'm going to be doing, they're typically going to be FX and also gold as well.
Nice. Same here. Sound like we're on the same path, really. I'm primarily trading currencies, so all the FX pairs, and then NAS 100, US 30. S&P, gold, as you just mentioned, and that's really it. I'll take a buy on Bitcoin. That's it, though. Yep. I wouldn't short it. And then I look at silver. Like, if depending on the setup, I may take it, but not often. Same thing with crude oil.
Yep. Yeah, that can be fun sometimes. Crude oil.
Same. And then I look at the Mexican peso.
Oh.
Yeah, absolutely. So those I don't trade the peso. I just look at it for like my rates, so I know where I am. But yeah, we sound like we're pretty much trading the same pair, same assets. So that's cool. And then I guess my next question would be so what's your approach? Like, what's your approach to the market? Is it just price action, order flow? What do you typically do?
Yeah, good question. So for the long-term stuff, to get my big picture stuff, I usually use Elliott wave. That's my main driver to give me an idea as to where the major swings are going to come from. But when it comes to much more shorter term stuff, even for entries and exits, I'm very much price action based. So I'm looking at combinations of bars or candles, depending on however you want to look at it. And that's really what gives me the entry triggers and also my stops, etc. So it's good to have a view based on whatever it is that you use. I use Elliott Wave, but then when it comes to trading, market timing, I think you should really be using kind of short-term charts and highs and lows and things like that.
Right. Okay. Nice, nice. Same here for the most part. Mainly order flow with price action, so to speak. And I obviously have candles on my chart, which I'll show here in a minute. I did have one of my devs create like this template for me on TradingView. So it has a few indicators, mainly EMAs, and then at the bottom I have like a trader's dynamic index, which I'll show here shortly. So it looks a little funky, but helps me see the information I need to see to kind of make my decisions. But yeah, mainly a lot of price action. I'm looking at those areas of interest, those key levels to kind of see where traders are stuck, and nice pattern confirmation, and I'm all over it.
Yeah. I think for me, one of the most important aspects of it is to figure out where people are trapped.
Yes.
I think that is a driver of a lot of the moves that we should be going for.
Yes.
Typically, when traders find they're on the wrong side of the market, that's when you're ready to make a trade, I think.
Mm-hmm. And there's things like that, exactly what I keep in mind as well. Like, right, along with everything, you should be looking for where traders are trapped. So when they're pulling away,
it's unfortunate. Yeah, it doesn't sound very ethical, but at the end of the day,
hey, it has to be someone. Either you're the one getting trapped.
Yeah.
Right. For sure. Well, cool. And then I guess my last question before we kind of jump into everything would be, are you like more of a swing trader, intraday trader, scalper? What's your like typical hold time?
I guess my ideal time frame is 1 to 2 days, kind of using daily candles or bars to give me the trade for 1 to 2 days. But also that I do some intraday stuff as well, just grabbing the occasional 20-30 pips here and there. Just I'd say a combination of the two, really.
Nice. Okay. Sweet. I'm more of a intraday for sure. I like to close them out before the end of the day, but every now and then on a higher time setup, if I see what I would call a Mona Lisa, which is a perfect picture, like for me, for what I want it to look like for one of my 5 setups, I'll definitely take it then. But it has to be gorgeous. I mean, like absolutely stunning. So cool. Good to know that part as well. Well, yeah, I guess if you didn't have any questions for me or anything, we can kind of jump right into the charts. I don't know if you want to go first or let me go first, whichever.
Yeah, you go ahead. You go ahead. That's fine.
Okay, sweet. Cool. So let me present here. Let me get my computer right. Where are we? Present. Okay, bear with me, guys. Sharing screen, entire screen. Okay, here we are. All right, so can you guys see this? Can you see my screen here?
I can't see it yet.
Okay, maybe it's coming up. Can you guys see my screen yet?
Nope.
So I got my TradingView chart up. Can you see it?
No, from my side, I just see the two of us on. Oh, here we go. It's coming up. Here we go. Good.
Okay. Guess it just took a second. Let me know when you can see my screen, please.
Yep, all good. My side.
Okay, perfect. So you can see my black TradingView chart. Yep. Okay, perfect. All right, cool. So it sounds like we're good to go. I'm only looking at my chart, Howard. So if for whatever reason there's a question that pops up, you have a question, whatever the case may be, just kind of let me know because I'm gonna be zoomed in on the TradingView chart.
Gotcha.
All right. Cool. So jumping right into it, a few things I was looking at today. One of them was gold, right? That's why I have this alert here. M off the 200. This is one of my 5 signature setups. I went over this yesterday. I'm not sure who's still here from yesterday, but just want to give a brief preface of like what I actually have on my charts, so we know what we're actually looking at. Obviously, this is broken up into 2 different parts, so to speak. So at the top, obviously, we have the chart, where obviously I have the candlesticks here, but I got 4 main EMAs here that kind of helps me guide and kind of see where I am in my structure here. And the blue one is the 800 EMA. The red one is the 13 EMA. The blue one is the sky blue one. Sky blue one is the 50 EMA. And then the white one is the 200 EMA, right? Hence the move, 200 off the EMA, right? So that's what I have at the top here. And then I just have some, I like to know these blue dotted lines are yesterday's high and yesterday's low. And then these orange dotted lines are my ADR high and my ADR low, right? So that's enough information on the chart for me to kind of really see where things are and kind of base a move of what I think is going to happen next on the actual chart at the top. And then at the bottom, right, we have a few indicators kind of thrown together here, but it's called a TDI, which is Traders Dynamic Index, right? So within this TDI, there's a few things going on. You guys probably are familiar with a few of these, but this is the Bollinger Bands on the outside. So the blue bands here on the outside waves. And then this purple colored line is my RSI line. And then the pink colored line is my signal line. And then this yellow one is the market baseline, right? And then the last line that you pretty much have here is a static 50, and we just call that the static, right? So I use these 2 in conjunction to kind of see where I am. It helps me kind of see where moves are, where there's potential pending orders, where traders are trapped. And I need them both to agree with each other, right? That's like the main thing about the chart and the TDI. They have to agree, right? So I was looking at this chart today. So that was like what I'm actually looking at and what's on the actual chart. And then as far as what I'm looking for when I'm deciding to take trades, matter of fact, I'll type it out here. So the first thing obviously is, whoops, not sure what that was. Let me try this again. Yeah, so the first thing I'm looking for is some type of, I need to know where I am in the structure, right? So that's the first thing I really need to see. From there, I'm looking for some type of pattern, right? I need to see some type of pattern that I'm looking for that actually confirms what I'm thinking. 3 would be higher time frame confirmation, right? And then the 4th thing and final thing I'm looking for is confirmation, right? Right. So these are pretty much the 4 things that I'm looking for. Now, when I get to number 1, when I say like, where am I in the structure? I'm always looking for this type of structure. It's what they call the market maker structure. It's always some type of M structure at the top. You have a break, you have a retest, another break. Actually, I want to move this. Looks kind of what's the name. So another break. Okay. Right. So you'll have it'll retest this area, break, retest, and kind of do the same exact thing, right? Just going back the other way. So this is the structure that I'm more or less looking for when I am deciding on these moves, right? So with that being said, I'm looking for 2 particular areas, okay? That's 2 areas I stay away from, but 2 of the areas I am really, really interested in, right? So at the top here, I have what we will call like a peak. I'm not interested in the peak. right? I tried and failed for many years trying to time and guess that bottom or that top, right? So I stay away from these moves. I don't time them. I'll confirm my bias, directional bias, once it breaks that area and comes back, right? So I'm only interested in trades right here and the trades that are right here, right? That's it. I'm staying away from both peaks high and peaks low. There's a few things with the TDI crossing that kind of gives me this exact directional move and what I'm looking for, which I'm going to get into in a second, right? Just to kind of give you guys, again, a high level overview, the things I'm looking for, those 4 things, right? Just the actual pattern that I'm looking for. So I know my structure, right? So I know where I'm in the structure if I'm in one of these 2 arrow levels, right? So I got box 1 checked off in essence, right? So I'll go ahead and erase all of this. Then I'll start getting into what I was looking for here today on gold, which still is waiting to confirm. I'm actually still waiting on this. All right, I know that was quite a tangent. We got any questions just yet or anything, Howard?
No, I'm good, thank you.
No? Okay, perfect. All right. Yeah, and if you guys got any questions, please let me know. I'll gladly explain my concept, justification, reasoning. Please ask away if you got any questions at all.
Yeah, nothing through on the comments just yet. So.
Okay, perfect. All right, well, cool. So coming out of here, right, just kind of what I was just pointing out to you guys, right, when I was looking at that structure. So this is kind of ugly, but, right, we have some type of M structure here coming down, right? And then now we're coming back. So I'm looking for this same type of move, right? Just going down, right? Because if you guys can notice this, if you notice this area, this is what I was referring to when I say the break and retest. Okay, not sure where my box is here, but let me try it over here. One second, I'm losing my tools. I just lost one of my tool things. I don't know how that happened. Where is this? Okay. Like, what in the world? Okay. So this area, right? This entire area going back out is where I see trapped traders, right? Because it was already high, as you can see at the top here, right? And then it broke that with this, all of this area right here. It broke that entire structure. So I'm looking for them to pull back to this area, retest it, and drop. And that's the exact move that we're actually waiting on right now, right? So just clearing all of this up once again. I'm looking for, and what gives me this indication is not just I know where I am in the structure, as I just mentioned, right? I can easily see this 5,200 cross. And once I see that, I'm looking for that pattern, right? That pattern off the 200 EMA. And for me, that would be some type of M structure, right? My target would be down here to the 800 EMA, right? My stops would go above the most recent swing. So anywhere above here, that's pretty good. But even a safer one would be above the ADR high. I don't think you need to do all of that. I just have it above the swing point, which would be yesterday's high, right? So that's pretty much where I will put my stop at. And again, my target would be at the 800 EMA here, right? And obviously my entry candle, I'm waiting for, as you can see, this alert to be set off. I'm a big advocate of the alerts because it helps me, like when I'm not in front of my computer, if I stepped away, it comes to your phone, your watch, the whole nine, email. So I really enjoy the alerts. I use these quite often. So yeah, we're waiting for, in essence, we're waiting for an actual close, right, to come back and close below this 800. I'm sorry, this 200 EMA and this 50 EMA, because it gave us a nice like close below earlier today, which didn't fully confirm because we didn't have 4-hour confirmation. But it pulled back, it retested this area, which exactly what we expected it to do, right? That's why it's that second leg, that second move for it to come back and retest this area. For me, there's trap traders all in this area here, right? They probably don't want to go any higher than yesterday's high. That's why you don't really see anything up there. But all in this area, I'm seeing trap traders. So what I'm looking for is a strong move that's pulling away from this area and closing down here, right? Just closing down there. From there, I'm in this trade. It broke the recent low, stops are above, and I'm riding this right down to the 200 EMA, right? The last thing I would really need for this move to fully confirm is, as you guys see, I always need so we got the structure. I pointed out where I was in the structure, right? With that model that I drew out. 2, again, was the pattern. I'm looking for some type of pattern. I just showed how they're coming back and retesting this area. I'm looking for, after the 5,200 crosses, I'm looking for some type of pattern off the 200 EMA. Typically an M for shorts and a W for longs. So this same thing could be inadvertent. I would just be looking for W's off the 200 EMA, right? So we got 3 of the 4 things that I picked out and kind of showed you guys. The last thing would be to kick it up to the 4-hour chart. And I would want to see some type of close, right? I don't want to see price all the way up here above the 13 EMA. I want to see it below this price, right? So this candle closes in the next 3.5 hours, right? I believe, yeah, 3.5 hours. So this could take for the rest of the day. This might set up later. This might set up tomorrow, when it may never set up, right? But the last thing I would need for this to fully confirm for me, once again, is a close below this entire structure, and mainly the 13 and the 50 EMA. Once that happens, I would be all over this trade, like all over it. This is one of I have 5 setups, right? I mentioned this to the traders who were watching yesterday. So we got 5 setups in my playbook, right? So this is just one of them. I'll get to it. It's actually like 4th on my list, and I'm going to get into some deeper stuff here in a moment. But I've identified all of my setups. They all have their own characteristics, their own entry triggers, their own everything, right? And it's important to do that so you know what type of setup or trade you're actually taking, right? And you can allocate your risk appropriately. So for me, starting at the top, like my most highest probability trade is, right, what I call the master trade. My second one would be what I will call the combo trade. There's 2 things happening in one. That's why I'm super confident in that one. My third one would be ID 50 trade. This actually happens on the 15-minute chart, which is interesting. We do have 1 hour and 4-hour confirmation, obviously, but it's an intraday move on the 15-minute chart, which is the only setup I have on the 15-minute. Before would be what we're looking at now, right? M or W off the 200 EMA. Then my last one is what we call the money trade, right? So when I'm going through my charts and I'm looking like to see what activity is there, I'm only looking at the chart to see if anything matches up with one of my 5 setups, right? If nothing's there, there's nothing there. There's no trade. If it's something there, we'll kind of hunker down on it and kind of take a closer look, set some alerts like you guys see here. And that's my approach to it. But coming back to this, right? So I also, if you can see here, I have huge confirmation, right? That same exact pattern that I drew earlier on the higher time frame, guys. Like this is crucial. Let me scoot this over to kind of do the pattern again here, right? So once again, you got this M structure here. You have the break, you have the retest, you have the break again, you have the retest of this same area, and then you have the W move, right? At the peak low to the peak high, right? All right, so this is in essence the same exact move that we see here on the left-hand side, guys. Like I literally can't make this up. This happens all the time, right? We have this same type of move, like the M. We have the break. We have the retest of this same area, right? And I'm waiting for this to come down and hit the 200. That's what I mentioned earlier today, guys, when I said I'm only interested in two of the trades, the one right there and the one right here, right? That is here. Does that not look the same? Like that looks exactly the same. And this is actually my highest probability setup as well. So, but yeah, this is my breakdown on gold, right? This is what I'm looking at. This is my ideology about it. And then one more thing, and I guess we can need to go to the next one. We'll take a quick break here. But one more thing on this is each one of these setups, I do rate them as well, right? They're not all just 1%. They actually all have different criteria. So my master trade is is an A trade, A setup, right? And then I have my combo trade. This is also an A setup. And then my ID50, this is a B setup, right? And then my MOW, this actually is a B setup as well. And then my money trade, this is the only one that is a C setup, right? Now, I don't know why that didn't come on there. Oh, there it is. So for me, I like to allocate a certain percent depending on like the type of setup it is, right? So this type of structure is fractional, right? So you'll see the same structure, whether it's on the 15-minute chart, the hour, the 4-hour, the daily, like it all is the same. Like it's all fractional. You'll see the same type of structure in all time frames, right? Now, typically on the 1-hour chart, right? If I see my setup like the way I do it now, for me, again, this is a W off the 200. So this is a B setup, right? So typically on my B setups, I only put on like a 0.5% or up to 0.75%, right? I don't ever go on a full percent unless it's an A setup for me. However, what would rate that or help me determine if I'm going to do a 0.5 or a point or 3/4 of a position is that higher time frame confirmation, right? When it's gorgeous like this, the way this is set up, then yeah, I'm more leaning towards that 3/4 of a position, right? Because I can see this setting up perfectly on both time frames, right? So just a little bit of backdrop. I'll go ahead and erase all of that, kick this back down to the 1-hour chart. And then what I always like to do is to put the strings on it, is what I call it, right? So I just put my stop loss and my take profits levels here. And then I can see that to the 800. So we got really two targets here. This could easily be on a safe side. You know, we're going for risking $1 to make $1.60. So 1 for 1.6. Again, my stops are above the most recent swing, right? So it's out of that area. I always say if they come back all the way up here, they can have the trade, right? They can just have that. But I'm willing to bet that this is the setup here, right? So in between this, as you see, we got like the 0.6, and then just a little bit stretch further. If you did have a target too, the full 2 for 1 would be that yesterday's low or last week's low, right? Whatever low this is, this was on the March 3rd. So Monday's low, actually. So this would be one of your two targets. So you either got a 1 for 1.6 at the 800 EMA on this particular move, or you have the full 2.0 move. But either way, I would be all over this trade once it actually confirms for me. That's why I have my alert set. And then, yeah, just a little bit. I know I said I'll pass it over, but I always like to point this out too. On my TDI, as I mentioned earlier, you do need confirmation on both, like they both need to agree. I do want to see some type of pattern on my TDI as well, right? So I love that I have this outside the band part here, right? That for me is they're creating an outside structure. So if I were to just put this line, vertical line here, I can see that at this point here on the chart, right? This is where traders are starting to get trapped. Like they're trapped throughout all of this, but this is where a large amount of orders are sitting right here, right? Because they are, for one, the band is RSI line is outside of the Bollinger Band here. That's like my starting point. And then, right, the next thing would be for me is to be looking for that, this to kind of start going down here, right? And the last thing I'm looking for is I can tell that there are traders trapped on my TDI in this area right here. We call this the reload, right? Because this is a static 50. So when price goes above this point, there's pending orders that are triggered on. So as you can see, this yellow market baseline, it kind of goes up and then kind of curves on down. Anything below this point, this little, let's say this little weird area in here, right? This area right here is where they're tagging on the longs, right? So pending orders long are piling on. You can see that, I can see that clearly on the TDI. And then the same thing with the actual chart, as we mentioned, right? This is a major area of interest, like major area. So I just want to see them pull away from that area and confirm with the close below. And I am all over this trade. So that is my extreme markdown for for gold shorts later this week, guys. Gold shorts. Now, if this doesn't close below and it just goes the other way, guys, there's no trade. Like, just let it go. There's no trade. Okay, but as long as there's a close below this area on the 4-hour chart, which it will also be closed on the 1-hour chart, this would, for me, would confirm, and it would be a good ride to take to the 800 EMA. And yeah, I'm going to leave this on here so we can see this tomorrow, guys. Right, so cool. I'll go ahead and take a break here. Do we got any questions or anything, Howard?
Yeah, I got a question.
Yeah.
Yeah. Do you want to put the chart back on a sec? Yeah, just generally, how far up would you say gold goes before it becomes the start of a move higher? Because obviously you've got that structure where it swings down, it corrects up, and then you look for the M formation, and then you get the confirmation on the breakdown. But I wonder how far, as a percentage retracement or whatever it be of that last swing down, do you say, hang on a minute, this has gone too far?
Yep. Great question. That's actually a great question. So two things. One, if it never closes below this price, like if it never closes above this area here where the alert is, for one, I'm not entering it, and I wouldn't advise anyone else because they're testing this area here and collecting orders. So you want to stay away from it, right? If they don't close below this area, they're going the other way. Like there's a great chance of that, right? So that's just part one. You don't want to be in it going the other way. But two would be, once they start breaking out, once they tag this, as a matter of fact, let me delete all of this. No, do it this way. So once they come out of this box, right, and they start hitting areas in here and like breaking higher above this area, for me, they're going the other way, right? And for two major reasons, just how I pointed out the 5,200 cross to the downside, it has already crossed to the upside right here, right? So it has to do that to come and touch this area, which again is fine for me. I just need to see it pull off of it. But this could theoretically, if it were to go the other way, these are the signs I will be looking for. That's one, right? Pointed here that the 5,200 has already crossed to the upside. But then two, to capture this move the other way, what I will be looking for is, let's say this started to run this way, it then broke out. Oh, for me now, this is now a long, right? I'm no longer interested in this move short, but then I will be looking for some type of move coming back down here and making this W structure off the 200 EMA and going long, right? And then at that point, this would be my stop low to pretty much as long as price close above the 13. That would be my entry point. And then minimum, like the first target would be pretty much around here, which is the high over here. So yeah, I hope that answered your question. I will be interested in taking it there if it starts to go the other way.
Yeah, gotcha.
Right, and then obviously this could totally happen, right? This could totally happen. So I will be looking at something like this, right? And that would be my entry. But great question. Great question. Yeah, as soon as it breaks that other way, this trade is dead for me, like going short. I would not be interested in it going long. I mean, short at all. It needs to pull off of this area pretty quickly. And we'll know when it does because the moves will be big. You'll see like one big, what I call a shift candle. It'll close below this entire area. And instead of these little small candles that we have now, they'll be fairly decent large candles because the market makers need to get out of that zone and pull it away as far as they can, as fast as they can. So yeah, this is one of the two, what I will be looking for. Obviously the first one first, because for one, it's only one away from actually confirming. But again, if it goes the other way and looking for longs, I'll be looking for some type of pattern like that. Hope that answered that question. Well, cool. Did you want to share your screen and kind of see what you got going over there and point some things out for us?
1 second. Let's just here we go. Share screen.
Cool. How do I? Okay, I need to stop. Okay, cool.
Okay. Let's see. Hopefully you can. It should be coming through soon.
Yep. It looks like it's coming in now. Perfect. Yes. I can see your screen. Yes.
Gotcha. Excellent. Okay. So as I say, I usually start off with a kind of a big picture view, which gives me the kind of a directional bias for for the next time frame down. So if we're looking at kind of longer term swing trades, starting off on the monthly and then going down to weekly and daily is really the way that I'd play it. So this is euro yen, chart of euro yen, one of the major crosses. So what you can see now, not everybody's into Elliott wave. Not everyone can grasp it, and for me, sometimes it can show you some really good setups. Other times, it can just confuse the hell out of you. So for me, if as you say, the Mona Lisa kind of thing, if you see something really obvious that fits nicely with an Elliott wave structure, that's really one of the one of the pillars of a really good trade in my opinion. If you know the Elliott wave structure, 5 waves in the direction of the trend, 3 waves against the trend, ABC. So what you'd be looking for is a kind of ABC pattern against the trend or against the last swing. And that kind of ties in with the idea about a trap being being laid for the majority of the market participants, because when you get the ABC, once you can identify the end of an ABC correction, then you've got 2 things in your favor. 1, you know that the trend is up. 2, you know that a correction has taken place and most likely has ended. So for me, they're the kind of major pieces of information that you need to give you a directional bias, at least for the immediate, the next few bars, whatever chart you're looking at. So just as an example, I'm just looking at this chart here, the kind of ABC type thing. So here you got this wave 1, the swing to the upside, and then you've got a pullback sideways, and then that pullback down, that extension down. And then a slam higher, like a big reversal bar like that. So if you're waiting for that completion of the ABC, what you're doing is you're waiting for that false breakdown. and then then obviously you're zooming into shorter term charts to to really nail it down. So you've got the swing to the upside, you've got the pullback, and then the breakthrough support, which ultimately fails. So you're essentially looking for market participants to come in and sell the break of a support level. And that's really where kind of the Elliott thing ties in with perhaps more kind of support and resistance, and looking at bar charts and candlestick charts. So just using that one as an example. So you get a swing to the upside, pull back sideways, and then a breakthrough support down here. Now something happens kind of on the way to heaven on this bar here, where the sellers realize that they're on the wrong side of the market. They get trapped, and you get that short squeeze kind of thing moving higher. And that for me is really the ideal time to take a stab at the market, when you've identified that the structure is bullish in the longer term time frame, but then you've waited for that correction. I guess a little bit similar to what you were talking about, where you get that swing to the downside, and then you get that pullback against the trend. And then
it's so funny. That's exactly what I see when you're explaining this right at the 2. That's the move that I will be interested in, because it's a break of that structure from the low. It's a run. It's a pullback to that same area. Yep. That's why I would want to get in it. It's so interesting.
Yeah, and it kind of, you've got to be very patient, and I think that's probably one of the keys to this whole thing is don't chase after every move.
Yes.
You're going to get breakouts all over the place, one way or the other. Some of them are going to work, some of them are not going to work. But if you are waiting for something specific to happen, in my case, I'm looking for completion of a wave. I guess in your case, you're looking for a confluence of lots of different things, including indicators and price action.
Right.
As long as you know what you're waiting for, that's the thing. Identifying.
Exactly.
I mentioned yesterday when I was talking just about what do traders do when they're not trading. You're spending a lot of time actually sort of looking at charts, really kind of nailing down your discipline, if you will. You get these top athletes and sports people. They spend a lot of time just practicing and just going through the motions and getting the thing right, so that so when it comes along, it's instinctive. So it's really a case of literally you can almost do this kind of stuff in your sleep, I think. when you know what you're looking for.
Absolutely.
One thing I will say about Elliott wave, just as a kind of as a technical approach, I think people use it and they're kind of looking for every swing, and they're trying to predict every single move. And I really think that's not the way to use Elliott wave. I think the best way to use Elliott wave is to almost kind of reverse engineer it, and look for basically identify completion of maybe a 5-wave sequence up or down, or an ABC up or down. So once you've identified the end of a sequence, then that can give you a bit of a clue as to what the larger sequence really is. And particularly if you're looking at, if you've got a view based on a swing to the upside or a swing to the downside, which gives you your overall trend direction. So that's really kind of the broad brushes, I guess, of how I kind of identify areas of interest. And I think that's really what you should be doing, looking for areas of interest. So yeah, just quickly, just want to go through this kind of wave count just to show how I do the thing. So euro yen basically made a major low back in May 20, amid all the COVID stuff. Stock market based out and started to go up, etc. And we've seen a big push up to the to what I think is a major high for the cross. We've seen an impulsive move to the downside, a very sharp move, the sharpest move that we've seen to the downside, since this bull market began. So very significant on the monthly candlesticks, and then since the initial move down, basically sideways. It doesn't want to go anywhere, and that to me looks very indicative of a corrective wave. Okay, so a kind of a swing to the downside, sideways, like an L-shaped recovery, if you will, where there is no real buying thrust. You know, they try to take it higher, get slammed down. Try to take it higher, get slammed down. So we're seeing buyers come in and try to push this market higher, but it doesn't last very long. One thing, I guess, a kind of a guideline, a rule, well, almost a rule that I use is to look for when I get a break of a support or resistance level, I like to ask myself what happens up to 2 bars later. That can usually tell you whether the move is true or false. So when you get the break of a when you get the break of it, like that, for example, during all these corrections along the way, this is still a monthly chart, so I guess we're a little bit bigger than what we normally focus on, but just to give you an idea about how the approach goes. So typically you'll get a slam down here, count 2 bars into the future. What happens? 1, 2, we're resuming the trend. Slam down, 1, 2, resuming the trend. 1 straight up, 1 straight up, 1, 1, 2, resuming the trend. So very often for me, counting a couple of bars after a big move, a significant move, usually can tell you whether that move is really true or false. So when the move is happening, obviously you get people reacting to the break and they're jumping in. But if they hold their position for maybe 2 bars into the future, they will be the ones that will be covering at a loss and giving you that opportunity to join the trend again. So just as a kind of a rationale as to how this stuff works. So this is monthly. Just going to the weekly. I think you can see the thing a little bit better on the weekly chart here, where you get the big breakdown here, massive rundown. So this is the first real bout of selling for such a long time, and then you get that ABC move up, 3 waves. So Elliott theory holds that if you see a 3-wave rally, then the trend is still down. So the underlying the balance of supply and demand is to the downside. So we had a big move to the downside, an impulsive move to the downside. So that tells you which way the trend is likely to be. The reaction came across in 3 waves, 1, 2, and 3. So that is a typical ABC rally. So once we get the ABC completion, we know, that's the end of a correction, and in all probability we should be breaking down. Zooming into where we are right here, right now, we've had a couple of tests of this big level here. There's a big level down here, and we're starting to see a nice recovery. So to me, it looks like a bit more chop within this trend, and this could give us a nice selling opportunity maybe next week. These are weekly candles. So once we come in next week or maybe the week after, it might start to curl over. So that will be something I think I'll be looking for from a multi-week perspective if we're looking at putting on multi-week trades. So going a bit more kind of short term. Just get our daily chart here. Okay, just 1 second. So the daily chart here obviously shows you a little bit more in more detail as to what's been going on. So we had that big break of support, but it failed, and then we started to rally higher. One of the setups that I like to use in terms of entry triggers is what I call unfinished business, UFB, where you get a long upper shadow. Market slams down, people come in at the close and they think it's bearish. Next day the market breaks through. That for me very often is a really good indication. A bit of you might want to call it a shadow breaker in terms of candlesticks. So when the market kind of makes a little shadow, so people look at it and they say, this market's a little bit oversold. I'm looking at my oversold indicators, etc. Maybe it's time for the market to bounce, and then the next day, the real move occurs. So that's something that I like to look at as a kind of entry trigger when I'm looking for ways to get into a market, particularly if I see an impulsive move to the upside. And then typically what you'll find is these kind of pullbacks are kind of B waves and second and third and fourth waves corrections. So what you're seeing, what you're getting on the candlestick is confirmation that a new impulsive move is about to begin. And I think another one there, that kind of thing, where you get a big push to the downside, market breaks down, but there's no real momentum. It bounces up, and you know, I can imagine people coming in with the you know, looking at candlesticks, thinking about morning stars and things like that, and thinking, okay, this is the place. So the next bar is going to be a big green candle, and it's not. So invariably, what you're doing is you're getting yourself ready for the market to resume its move. I think one thing I found is one of the hardest things when you're looking for corrective retracement. Some people like to trade based on retracements, and it's really difficult because you're thinking, okay, let's put my Fibonacci retracements on a chart. It's got a base somewhere around, you know, maybe the 38.2 or maybe the 50 or the 61.8 or whatever it might be. And invariably, the market never really comes back to where you want it to go to, or maybe it comes back too far and stops you out.
Right.
And I think the way around that is to just identify this kind of unfinished business thing, where the market tells you that the correction's over. You're following price action rather than, you know, anticipating it. Some people like to, you know, scale into a position at retracement levels. But ultimately, you never really know when a market reverses, whether it is a correction or whether it's going to be a complete reversal.
Right.
So when you start selling at retracement levels, what you're doing, I guess you're gambling a little bit that the last move has been, you know, is indicative of, you know, more weakness or strength to follow. Whereas if you let the market tell you by making a weak push to the downside and then a break, weak push to the downside, then a break, weak push to the upside, and then a break. It gives you a bit of a clue as to, you know, who's in control of the market.
Right.
And I think, yeah. Any questions so far? I may be rambling.
No. I'm listening all through the way, actually. So I guess I did want to ask you about this. Like, so where would you say like the next two areas of like interest for opportunities would be on this particular chart?
Yeah, on this particular chart, because the thing is running, this is like the second day of a run. I usually like to wait for the market to end, a couple of days run, and then maybe go sideways for a couple of days. It's one of those kind of no man's land situations now. Like you wouldn't want to sell it. You wouldn't want to sell it because it's rampant, and you wouldn't necessarily want to buy it because you can see a pullback. So for me, I like to see that kind of situation where momentum dries up. You get narrow ranges, and then you get that unfinished business kind of thing where you can break through a shadow or you can get a pullback. Looking at the chart, obviously that is an area of interest for sure. So it may be a case of being long on a breakout here. That would probably be a good place to think about taking some profits. I think that'd be a fair assumption to go on. If you are looking at maybe shorter term stuff, it may be an idea to wait for momentum to dry up around this level and then think about the short side. But for me, this looks to be quite quite impulsive, and there's perhaps more behind it, purely because it broke that big level and it's starting to trend higher within the bigger range. So I think if anything, I'd be looking to buy the pullback from a swing perspective rather than trading from a scalping perspective. Do you see anything based on what you do on this thing?
So for this one, it's kind of, for me, it's like in this range. I would definitely want it to come out of there first. And then the exact area where it's at right now, for me, there's a bit of unpredictability because you got that gap to the left side that they just filled. If you look over two points, I don't think I can point on this thing. Can I point on this thing?
See where we go. Where are we?
I'm not sure. It's to the left though. If you look with the area to those 2 wicks, one more to the left, one more time to the left. That area, the gap.
Let me see.
Like it's filling this gap here.
This one here.
Yes. Yeah. They're filling that gap right there. There's tons of orders sitting there. So that's a crazy predicament to be in right there. You never know where that's going to go.
Yeah, I can imagine, if Yeah. I think it's one of these markets that it needs to spend a couple of days maybe going sideways, and then we can get the next one of these.
Right.
I like to go for these kind of two-day moves up or down, but usually they follow periods of low volatility. And one thing I like to to kind of teach people is that markets, they go from these periods of high to low volatility, usually lasting a couple of bars. So a couple of bars directional, a couple of bars sideways kind of thing. So in order to capture these things, you need to wait for the sideways kind of moves. So this one, yeah, I would say I wouldn't want to be doing anything necessarily on this thing on a a multi-day swing basis.
Yeah, for sure. Everyone probably saw that and they're like, "It's a double bottom. You're supposed to buy the double bottom." So it just took off. One huge green wick. The next candle. The next candle's filling that gap. This thing is crazy. Like it could go wherever it wants to at this point. For me, that's I would say that's no man's land as well.
Yeah. I mean, for me, what I'd really like to see is this kind of thing where it kind of spends a few days maybe just chopping around here, and then curls over and makes another lower high. Because I think the overall picture is still bearish based on this big move down, the ABC up, correction. All these guys are trapped. All these guys that bought the breakout here.
Exactly.
And when it came back, you got it's almost like an inverse head and shoulder continuation pattern. So left shoulder, head, right shoulder kind of thing. It looks like one of those kind of things. But you've got all these people trapped, above this kind of level here. So it might be good to see it kind of top out around here, and that will be the opportunity to go for the the big breakdown.
Right.
So yeah, that's that. So that's euro yen. The other one I was going to look at obviously was sterling yen. They're kind of like what I like to call sometimes the ugly sisters, depending on whether they're bullish. Depending on whether they're bullish or bearish. Let me just go for the so a similar kind of thing here on the Elliott wave count, where there's been a very long advance coming from the COVID low, and it looks to me like it was complete a few months back at this high here. So again, we had this kind of big move down, a kind of an attempt at resuming the bull market, but there's no real demand. So reverse, up, reverse. Last month down a bit, a little bit up so far because we're responding to support. Same as euro yen, similar kind of thing. Let's go to the weekly, where we can see a bit more. So it's almost the same kind of picture, except euro yen by comparison was down here. So sterling yen has been holding up a bit stronger than euro yen, but it's the same kind of. For me, it's the same big picture where this is a major top. Big aggressive selling, an attempt at resuming the bull market, but a bit of a kind of M formation there, double top type thing. But for me, ABC, it tells you that the trend is actually turned from up to down, and that is quite valuable information, I think, to know which way the market is. If particularly after a major top, or what looks like a major top. Because if you're looking, if you're thinking about an Elliott sequence, what you really, so you get that big move down, and then the kind of attempt at going higher, and then it starts to break.
Yep.
Although to be fair, it's struggling a little bit down at these lows. So I'm again, as with euro yen, maybe a little push higher, but I don't think it's going to be a big push. We're not going to take out these massive highs up here, lower highs. So
yeah, that's kind of
so in terms of where we are.
I was mentioning when I said just knowing what you just touched on, knowing where you are, like having a bias, right? That was my number one thing when I said just knowing where you are in the structure, so you can get an overall bias, right? Like I'm not worried about longs and shorts. I know it's going short, so I'm only looking for opportunities to go short. That doesn't mean automatically go short. But I'm looking for reasons to go short, right? Confirmations, confluences, right? So yeah, I totally agree. It's almost like half the battle is already won by just doing that one part right there. Just knowing where you are in the whole cycle of it all.
Yeah, no, absolutely, and it can filter out a lot of bad trades as well, because obviously when we're trading, if we're trading long and short, we're going to get some whipsaw trades if you're trading breakouts all of the time, which many people do. So having that kind of bias, which comes from a bigger picture, can obviously cut down some of the drawdown when you're trading. We're all going to experience drawdown at some point. That's just a fact of trading life.
Right.
But not knowing which side to which side, I guess if you're looking at it, it's a kind of a battle between buyers and sellers, and knowing which side is likely to win. And waiting for the appropriate moment to join the battle, really, on the side of the winner.
Exactly.
So we almost know, we don't know for sure, but we almost know that the bears are going to win out in this battle. But we're waiting for the right time to to push the door that's slightly open, if you will.
100%. I just want to be along for the ride. That's it. Let me ride with you.
Yep. Yeah. And not only that, I like the idea of getting pieces of the ride, rather than just going for the whole wave, or wait. If we can get the vertical movements, those 2 or 3 bars in the direction of the trend, that's really what the name of the game is. For me, is just catching those vertical moves. When is the market likely to go vertical one way or the other? Sitting through corrections is not. It's not good for your health.
It's not.
Yeah, I think people who they take a trade and it goes a bit wrong, then they say, "Oh, I'm in for the longer term. I'll sit through all these corrections." But what they really mean is they've kind of lost their discipline, and they don't know where they are.
Yes.
It's always good to know how and when and where you're going to get out. And that sometimes is more important, I think, than the entry. It's so easy to get into a trade, but it's not as easy to get out, because you've got that psychology thing going against you.
Yep. And that emotion is holding on to it.
Oh yeah. Once you're in, then suddenly you're not an innocent bystander. You're kind of you're part of the problem.
Exactly. No, I tell traders all the time, right? Like you have to know when you were wrong. Like same thing how I marked up the gold trade earlier today. Like if it goes short, if it confirms in the 4-hour chart, the 1 hour be confirmed, I'm short. But as soon as it pulls, I'm in it and it goes the other way, and it goes above those highs, at that point, I know I'm wrong. It's as simple as that.
Yeah. No, it takes a wise person to know when they're wrong, and as my wife says, I'm wrong quite a lot of the time.
It's like the book. I forget the author, but it was The Biggest Loser Wins. I mean, the best loser wins, right? Like you got to be a good loser before you can be a good winner. You just
totally.
It seems wrong or backward to say, but it's the truth, right? Like I remember when I first started, every loss that I took, like I felt it. It was like death of 1,000 cuts. Nowadays I can get stopped out, lose my full percent, $2,500, $5,000 sometimes. Is like, I mean, I did everything I was supposed to do. I can't do anything about that part, I follow my process. I follow my plan. Yeah, everything is fine, right? So I literally don't even care about those, because I know that probability, I'm relying on data that this is going to work out. Of course, I'm going to get hit sometimes. It's like getting into a fight and never expecting for them to touch you. As long as you win.
Oh, that's not going to happen. Yeah, I guess Mike Tyson might have come close once or twice, but apart from that.
And I heard something else too. They mentioned too, like even on like when you do have bad trades or whatever the case may be, and you lose trades, like don't look at it like the end of the game. You want to look at it as like that was a bad pass, or someone stole the ball from you. Like just one simple thing in the whole entire game. It's not the end of the game or the end of the world or the end of the battle. However you want to, whatever analogy you want to use, it's a small blip going down on your equity curve. That's all it is. Don't get too wrapped up in that part.
Yeah, no, totally agree. And I think that's why size matters as well. You're going to get hit every so often, and when you do, make sure it's not too big.
Right.
And I think that you are going to go through winning phases and losing phases, but by controlling your size, by not doubling up when you're having a bad time, and chasing losses. You need to be a little bit disciplined. Make all these decisions, I think, before you enter the field of play. Know exactly what you're going to do, how much you're going to risk, and know when to call it a day. Sometimes the markets can get really crazy. Something's come out, some figures come out, and it's more volatile than usual. And whatever you do is not going to, you get whipsawed, and it can happen. But sometimes it's good to have maybe like a maximum number of trades per day. You can have a maximum dollar risk per day. Lots of ways to control the downside, just so that you stay in the game.
For sure.
And stay in the game, because what you're doing, assuming that you spent a lot of time, a lot of really good education, access to some really good people. People read books. There's so much out there that can help. And I think you can get the confidence that there are people that have been doing this for quite a lot of years, and if they can do it, then surely you can do it.
100%. I agree with everything you just said. Starting with you got to set some type of boundaries on you, right? Like even in the car, you have a speed limit. Like you need to give yourself a speed limit. You can't just get on the road and just do reckless driving, because you're going to crash and it's not going to be pretty, right? So you definitely need to have a speed limit, aka a maximum amount of trades you can take a day, dollar amount, percentage amount, whatever that may be. You need to have some type of strategy to minimize that downside for sure, because I tell traders all the time, like, if you don't have a plan before you get in there and know what you're doing, when you actually enter the market and start trying to make decisions, they're all emotional, and you are literally an entirely separate person. Like you are not thinking clearly, right? So you have to make these decisions before you get into it, and constantly create that if-then scenario, right? Like if it does this, then I'll do that. If it does that, then I'm going to do this. And all of that needs to be thought out, hard, concrete rules, checklists before you get into the trade, not after.
Totally. I got to say, one of my experiences, I once worked for a guy many years ago, very big trader, trading hundreds of millions in currency, and he would get in and he'd say, right, let's place a stop at this level. Okay, that's a good level to place a stop. And then when the market would move against him, he'd say, where's the stop, guys? And we'd say, this is where it is at this level, 100 or something. They say, move it to 120. It's like, no, what you're doing is you're increasing your risk. You need to you make the decision. Ideally you move the stop only when the trade goes in your favor, not when it goes against you.
Exactly.
It's supposed to be there to control your risk. So as much discipline as you can possibly use when it comes to trading, I would say.
For sure. Yeah, obviously early in the beginning, I used to move my stops quite a bit, and then for some strange reason, it's like magic. Every time you do that, they still end up taking you out anyway.
Yeah.
Right? So it's like as the saying goes, your first stop out is the least expensive, right?
Yeah, or as Cat Stevens would say, the first cut is the cheapest.
Right. Simple as that. Like stick to that ideology, because it's I don't know how it happens, but again, that's just goes back to you just gotta accept when you're wrong. Like again, for me, I don't mind it. I've been an entrepreneur for quite some time now, so understand people don't like to lose money. People don't even like to lose $10 on the street, let alone get stopped out and lose a few $100. So we understand it hurts, but at the same time, you just have to have some type of strategy and discipline in play. Like moving a stop is the wrong thing to do, right? It's the wrong thing to do. Yeah. Like I'm sure you can. You probably don't even remember the times that it worked out for you when you did that. You only because it didn't happen often.
Yeah, no, it almost seems whatever you do is going to be the wrong thing if you start, chopping and changing.
Yeah.
And it's only when you kind of say, okay, these are my rules. That's it.
Yes.
They're based on the study, and I've spent a lot of time, a lot of research, and this is what works. There's going to be times when it doesn't, and times when it does. But you've got to trade and live through those times.
Mm-hmm. And risk properly so that you can make it to even see those times, right?
Yeah, and that's the thing where I say size really matters, because obviously, you need to you need to come out the other side, because sometimes when a drawdown kicks off, you don't know how long it's going to be, how deep it's going to be, and all you can do really is to control that risk. And if you've got the right methodology, you've done your homework, you'll come through it. That's the thing, I think. And obviously, once the things swing in your favor, once you start making money, then maybe you can increase the sizes a little bit more, not
Right.
aggressively, but a little bit more, because you've got more capital to trade with. Cushion, yeah. Another thing I would say, I guess, would be don't trade too many markets at the same time, because it might be the right thing to do in terms of signals, but it can certainly mess with your head.
Right.
And if it messes with your head, it's going to mess with your, mechanically, just doing what you need to do in terms of trading and monitoring and all the rest of it. And the psychology is going to be all over the place, because it doesn't matter what you do. You're a human being. You're still going to be affected by the swings up and down. It's just human nature.
For sure.
So if you're trading like 5 or 6 markets at the same time, it can be a bit too much, I think, to do, unless you're doing it with you're doing it with a robot, a trading robot.
Yeah.
Automation.
No, I agree, and I'll be honest. Like I'm pretty sharp. I've been doing it for quite some time, so I'm good with execution. But once I get to about trying to manage 2 trades that are open and really give them my full focus, that's probably as many as I can do. I don't really open more than 2 trades at once. Like that's actually rare.
Same.
Like I might be, I don't even like to be if they oppositely correlating. I don't like to be short one and long the other, or 2 longs, 2 shorts, because you're kind of putting on double the risk from my standpoint. But yeah, even in those scenarios, that's like max I would do. And in those scenarios, I would typically just put on a 0.5% risk anyway, so that I'm not doubled up. Because if you lose on one, you're probably going to lose on the other one, versus 2 pairs that are not correlated, and you do that same thing, right? So
I've seen that one before, where you do 2 trades that are literally you're kind of, it's a bit of a hedge, and then you get hit on both of them.
Yes. So you got to watch that too. So I agree. You definitely want to make sure you're not doing too many of them, because you end up making stupid rookie mistakes because you're just doing too much. In essence, you're trying to be a little too greedy. We both know that you didn't get a confirmation that checked and met all your requirements on all 5 pairs. Now, come on, you didn't get all of those. Like you're being greedy on probably 1 or 2 of those, probably 3.
Yeah, and I made that mistake many years ago, when all the markets were moving together. Suddenly they were all moving because of the same thing, and I was buying euro dollar and buying S&P and buying gold and all that kind of stuff. And all I was doing was like maxing out my my position, the exposure in one direction.
Yeah.
So you need to be a little bit careful on that side. I mean, I think in terms of risk, I like to put it in terms of micro and macro, where the micro risk is kind of just managing your trade, using stop losses, whereas the macro risk is really kind of your account risk and how many positions have I got, how much capital is applied to each of them, etc.
Yes.
So it's good to kind of think of them on risk on 2 different levels, I would say.
For sure. I have the same approach similarly. It's pretty much the same thing. And then also how you just mentioned too is, right, like I have a recent experience, right? So we're in a trading group, and lately NASDAQ 100, US 30, and S&P, they've been kind of going along like the same path for the most part. And one of them had set up, well, they were all pretty close, but only one of them actually fully set up. Right. And I'm trying to tell this trader, like, we only want to take this one because this one actually meets exactly our criteria, right? And he's like, I'm like, the other one is close. Like this one's super close, but technically it hasn't done it. So I'm gonna leave it alone. And he's like, well, I'm gonna just take both of them. I'm like, I don't think that's the smartest thing to do, but I'm only taking this one. But have at it. I'd say don't risk too much on it. Well, everyone hit on it who just took the one that fully set up. The other one didn't, and he ended up earning half of what he could have had he just followed one simple instruction.
Yeah, I mean that's the thing. I guess when you're looking at the stock indices, they don't always do the same thing at the same time. You'll get divergences between NAS and and Dow or whatever it might be, and sometimes you'll get people sort of selling techs and buying large caps and things like that. So don't expect them all to go up or down at the same time. They sometimes they do, sometimes they don't. So wait for the signal.
Please wait for the signal, right? Like, and not to even brag, like that's why I'm the pro and you're not, right? Because of situations like that right there is what separates us. Because you can't even take out the emotion. Because even obviously after the session we had to talk about it, and it's like, dude, you got greedy, right? You just got greedy. At the end of the day, you got greedy. You wanted 2 instead of 1, and guess what? You ended up with a half. You see how that works out? It's insane. Yeah. I know trading is so different that typically most of the tools and the experiences that might have gotten you tons of accolades and success and certifications, you can't always bring that here because it just doesn't work. Like it's an entirely separate beast. It doesn't matter how successful you were in your previous professions or careers. You need to come to this industry, to this market with a different set of skills, right? Like even down to being comfortable with randomness. Like that sounds crazy. How can you make money off of randomness? Right? So you have to think of it entirely separate. And some people just can't grasp that concept. And they end up paying for it later.
No, I must admit, I talked about this yesterday. The idea that the people that are professional traders, they understand that you're going to have a lot of negative feedback from what you're doing. Whereas most people that go into other professions, whatever they do is correct. It's they take an action and they expect a result and they get that result. In trading, you're not going to win on every trade. So it's kind of taking a step back and saying, well, I'm going to win over a series of trades. There's going to be winners, there's going to be losers. There is a certain amount.
Appear.
I'm sorry?
You never know when the winners and when the losers are going to appear. You just never know that.
No. So keeping the size relatively constant is a good idea because the next trade you don't know for sure. As you say, you've got probabilities up. The probability is such that you're likely to win, but you may not. You may have maybe 3 losers in a row before you start getting some big swings in your favor. So size is important to keep under control.
Yeah. It's almost like it's just so much stuff for I'd say for them to really grab a hold of, but slow and steady, right? Slow and steady.
And that's not what the what they tell you on the social media. You've got all the Lamborghinis and the Rolex watches and all the rest of it, but it's slow and steady.
Yep.
It's not.
And funny enough, like even the story I mentioned earlier when I gave my intro and said how I met, got into trading. The Caesar, he had a Lamborghini, right? And you think that this guy has a Lamborghini. He made $2,375 in my face in 2 hours. You think he has all the keys to the universe, right? And then you find out later that, he doesn't know what he's doing. That was just a lucky day. And that Lambo that he had, someone owed it to him or something like that, right? Like, we're talking about South Florida. Everyone has a Lamborghini there. Right? So it was something like that. But really, this guy just has money and he's trading, but he doesn't know what he's doing. You get what I'm saying? You learn that later on when I see this guy. The part of the story that I didn't say is I seen Caesar lose like $40,000 in like 2 months. So like, whoa. Like he had I caught him on a good day in essence.
Yeah.
But this guy literally didn't really know what he was doing in the long term. But I'm still glad that happened because I wouldn't be here if it didn't. But well, cool. I know we only got a few more minutes. I did want to jump back over if I can grab the screen.
Yeah, go for it. Yeah, I'll stop share. So
cool. So I just wanted to give one last little for gold, right? Because this is still in play. So I just want to make sure everyone who's watching can take advantage of it if it does set up. Where are we? Okay, we're here. So yeah, just kind of remember this, right? This alert that I have set for, just so you guys can have the price. Oh, nice round hole number too. So nice. It's about right at 28.99, right? So we can pull it down a little bit further just to kind of confirm it. Anything at 28.95, a close below 28.95, right, would be a nice move to the downside. Just know I'll be all over this if this does happen. And then I'm going to erase this and put the strings on this for tomorrow, right? Just so we can kind of see what did happen. And I'll leave this for us to check out tomorrow. See how it all goes. Just know if this does happen, I'm in it. Yeah. So this is the exact move that I would be looking for. Again, that price is 28.90. Yeah, 28.95, close below. And yeah, I think that was pretty much it for me. Let's check one more thing here. Yeah, so this is what I was meaning when I was saying that all three of these were kind of correlated. So NAS 100 looks just like US 30, which looks just like S&P 500, right?
Yeah.
But this is what I wanted to point out too, right? Where when I said I'm looking for the move, and I know we got to jump off. I just want to show this really quick. Once this 5,200 crosses, I'm looking for the M structure off the 200 to go short. This one never gave it, right? This was the move that was close that I tried to tell this trader to leave it alone because it didn't do it. And then we had this move actually did do it, right? So we had the 5,200 cross. This move gave you some type of M structure off of the 200, right? So the move was here, close below, stops above, target was actually down here. It just continued to run, right? You can trail that stop. That would have been the wise thing to do. I personally close all my trades at 355 every day. I don't hold it to the session changeover. I don't want to get gapped. I don't want to get knocked out for whatever crazy reason. I don't want to pay swap. And I don't even have to worry about it. I just want to close it out at the end of the day. But this is the move that I was pointing out to that actually did work out. So even though this one, you see price did touch the 200, and then we had this move as well, right? So out of the 3 trades, only one of them actually did it, right? This one did not make the move off the 200. So this one does not count, right? But just take a look at this. This one is close, didn't do it, right? This one actually did it. This one made the move off the 200, right? And then this one didn't either. So it was a pass on those 2 moves, right? So I would leave. And again, even though I don't care that this one went like, oh, you should have took it because it ultimately ended up doing it. But no, I shouldn't have. That wasn't part of my process. That wasn't part of my checklist. That's not part of my trading plan. What the take was US 30, right? And that one paid out. So I don't care that the other 2 ultimately didn't end up going. I'm only following my process. That's the most important thing for me. Even had I taken the other 2 trades and won on it, it might have been a green on the day, but for me, it was a red on my process because I broke the rules. And that's what's most important, is following the trading plan, following the rules, and following your process.
Great.
Right. So cool. I just wanted to break this down and just kind of, since I brought up the topic, this was that exact move. So yeah, guys, just stick to what works for you, what you know that works. It'll help you out a boatload.
Great.
And I think that's pretty much it, guys. Any final questions or anything? Howard and I are going to go ahead and jump off here briefly, or any closing remarks you got, Howard?
All good for me. All good. A really good session. Really enjoyed it.
Yeah, nice. Awesome, and enjoyed the session as well. By all means, guys, like I said, feel free. We're on here every day now, at least for one of the midday sessions. Please ask away questions. If you guys come up with something later on, like, once we get off, write them down, take a note on your phone, and ask somebody tomorrow, right? Because we definitely want to dig deeper into everything for you guys and add as much value as we possibly can. So, cool, great session. Appreciate it, guys. Let us know if you guys got anything, and we'll catch you tomorrow. And stay safe out there. All right.
Hey, guys.
All right, Howard. See you later.